a Starlink IPO soon at the end of next year, but also you just want to own something because of Elon Musk's track record. So the cap table is really interesting.
Yeah, there's a great new podcast, Elon Inc. Have you been listening to it?
No, that's from Bloomberg Businessweek.
Yeah, David Papadopoulos. I never realized that he has such a good voice for radio.
Yeah.
I mean, I've heard him, yammering at me in the newsroom, and it's not the same. But Elon Inc., what a cool podcast, which covers obviously all of the, the whole empire. So Starlink, SpaceX, Boring, Tesla, Twitter, which some people insist on calling X. And it's such a cool thing. So Starlink, maybe at the end of next year, but we won't be able to get a hold of the launch business of SpaceX as a public company.
My understanding, and the understanding of my colleagues who reported the stories, is that if Starlink spins off into a public company, SpaceX, the remainder, which is largely the launch business, remains a private company. And the transaction, based on past precedent, is every SpaceX shareholder of note or record would receive an equivalent volume of Starlink shares. Obviously, their value would be changed relative to whatever they held the private SpaceX stock at. So that will be interesting. And just on that, there's only so much money you can make sending things into orbit, right? The per launch margin is much lower than a data-based business. So Musk has said in the past that it would cap out at like $3 billion of sales a year. Actually, I'd heard that this year it's more like $4 billion, $4.5 billion, but it has a limit.
I know that because I read Ed Ludlow's reporting.
Do you? Look at you.
And I watch and listen to him on Bloomberg Radio and television.
SpaceX weighs spinning off Starlink via IPO as soon as 2024. But following Bloomberg's report, Musk called it, quote, false in a post on X, the social media platform he owns, without elaborating. Ed Ludlow, thanks so much. We appreciate it. Ed Ludlow, he's the host of Bloomberg Technology. He's wired in to all that stuff out there, so we appreciate getting some of his time. We break it down the cap table. Who owns SpaceX? Only here on Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Target shares are advancing. They're up about 18% right now after third quarter earnings outpaced forecasts. Bloomberg's pretty good to explain what else is contributing to the rise.
Not only did they beat some of the revenue expectations, their profit really showing up quite a lot. Their adjusted EPS as well coming in about $2.10, beating the $1.48 estimate. But here's why you're getting the extended jump. Target is also talking about a decline in inventories. And this is really significant because we know as the inventory story in retail has been really sticky.
And inventory was down 14% from a year earlier. Comparable sales, they fell for a second straight quarter, but it was less than expected, and it was offset by a strong performance in beauty products. Well, TJX topped third quarter estimates, but the guidance was a bit soft. We have more from Bloomberg's Katie Greifeld.
Looking forward, TJX said it expects comparable store sales growth to be between 3% and 4%, with EPS in a range of $1.07 to $1.10. So that comp stores forecast actually beat estimate, but you take a look at what analysts are looking for. EPS, the estimate there is for $1.12, so a bit soft on that metric.
Shares right now down about 3.5%. Walmart, Macy's, and The Gap, they report tomorrow. And Walgreens is betting that it can become more efficient by having its drugstores serve double duty as retail outlets and e-commerce fulfillment centers. The Wall Street Journal says Walgreens store workers will pick and pack items ordered through third-party apps like DoorDash, and deliveries will be made the same day. Walgreens up about 4% right now. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
Coming up to 10:22 on Wall Street, I'm Nathan Hager. We check the markets all day long on Bloomberg, and stocks are extending their gains for the month of November. The latest data on retail sales and producer prices are extending the soft landing narrative for the Federal Reserve. Right now, the S&P 500 is up 19 points, trading above the 4,500 level. The Dow Jones Industrial Average is up 138 points, and the NASDAQ is higher by 66 points. The 10-year Treasury is tumbling down 22/30 seconds for a yield of 4.53%. The 2-year yield is at 4.91%. NYMEX crude's down 1.5%, trading at $77.06 per barrel. COMEX gold is down 0.25% at $1961.90 per ounce. The euro is at 1.0842 against the dollar. The yen is at 151.14. That's a Bloomberg Business Flash, and Bloomberg Markets continues with Paul Sweeney and Matt Miller.
Thank you very much, Nathan Hager. We appreciate that. Paul Sweeney, Matt Miller here in our Bloomberg Interactive Brokers studio. We are also streaming on that YouTube thing, so that's pretty cool. And guess what? Bloomberg is now in your dashboard with Apple CarPlay and Android Auto. It gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. How do you get it? Well, the good news is it is free with the latest version of the Bloomberg Business app. That's the Bloomberg Business app. Get it on your phone in the Apple App Store or on Google Play. Just download the app, connect your phone to your car, and boom, get started. And it's all presented by our sponsor, Interactive Brokers. So some good stuff there. Tom Keene is all over that in the surveillance Bentley, so that's good news there. You're getting with the 21st century. Target.
And you'll be able to access my podcast.
Which podcast?
It's called Hot Pursuit.
Nice.
Me and Hannah Elliott every week
like
go through all of the new, typically towards the higher end, like luxurious pieces of news in the car world.
You don't spend too much time like on strikes and this UAW and contracts.
We don't talk about that too much. I mean, occasionally, obviously, if it impacts, for example, like Bronco production or Wrangler production, we care. If there's a slowdown in F-150 releases, then we care. But Hannah tends to test drive
only the best.
The most expensive cars out there.
She has the best job at Bloomberg.
And I'm driving a Kia Sorento right now.
But I heard great things about it.
It's actually a pretty amazing vehicle.
I know.
I mean, especially considering the price.
And I like the redesign of the Kia logo, too. That was
very cool.
Did that. All right, Target. It's a $60 billion market cap stock. It's up 18% on earnings. What happened? Jen Bartash joins us, senior industry analyst for Bloomberg Intelligence. So, Jen, I guess they beat numbers. Is that worth this big move in the stock? What are you seeing here?
Well, they did beat the numbers, but I think more importantly, everyone's sort of been waiting with bated breath for Target to kind of hit a pivot point. And it seems that this may be that point, and the market is responding really well to that. So when you're seeing margins expand, you're seeing better than expected results, and they seem to have their inventory under control. All of those things have been a positive for the market today.
But Jen, I see that, even though we thought same-store sales would fall further, they did still fall 4.9% in the reporting quarter. And in the quarter before that, they fell 5.4%. At a time when I realize inflation is coming down, but there's still a lot of inflation. More than 3%, more than 4% in the last quarter. So if you add those things in, then we're looking at likely double-digit sales drops.
Well, we're not really looking at double-digit sales drops unless you're looking at it over that broader time. I mean, when we're looking forward, we do think that sales overall next quarter are going to be down in the mid-single-digit range. Part of that is due to prices coming down, although they are still elevated.
But prices aren't coming down. Prices are still rising.
No, they're coming down in some categories, and that's the key thing. But the problem for Target is because their product mix is still so skewed to discretionary items. Any weakness that you have in apparel, in home, things like that really outweigh areas where there may be a little bit of positive news in areas like beauty. And that's going to continue through the fourth quarter. So we will see revenue down year over year. We will see same-store sales down year over year in fourth quarter. But it's the sequential improvement that has people a little bit enthusiastic today.
Do they make money selling? I mean, I don't know the Target business obviously nearly as well as you do, which is why we have you on here. So, do they make money? Do they sell gasoline, for example? I know that some stores like Costco and Walmart have gasoline sales, and I'm trying to think of where prices have come down. That's one of the few things that I can think of. But you mentioned like apparel. Have those prices come down as well?
Well, they don't sell gasoline.
Okay.
They're one of the few big retailers out there that don't. But in terms of prices coming down, it is a relative thing, right? So we are seeing prices come down in a lot of consumable categories. They still are higher than they were a year and a half ago, but they're lower than they were 6 months ago. And that's kind of the important progression there. We're seeing apparel costs are coming down. A lot of the input costs behind some of these key categories are becoming cheaper. So cotton has come down. A lot of the basic commodities are starting to come down. So all of that is good in terms of the long-term direction of inflation starting to recede, which hopefully then gives consumers a little bit more money in their pocket, and then that benefits Target when they start to re-spend again on discretionary items.
All right, so let's look ahead a little bit. Our good friends from Bentonville, Arkansas, Walmart, they're going to report earnings tomorrow morning before the open. What are you looking for there?
Well, with Walmart, it's really going to be a question about, they've talked in the last couple of quarters about bringing in more higher income households into the fold. So with Walmart, I think everyone's expecting a pretty solid quarter from them. Back to school is usually a very good quarter for them. And based on Target's results today, it gives reason to be optimistic about Walmart's reporting tomorrow. But I think what people are going to be looking for is, as we go into the fourth quarter, how well will Walmart be able to retain all of these customers that they brought in who were really looking for value? And as consumers start to spend a little bit more on the holiday, or they start looking at that spending, is Walmart going to be able to capture that, or are people going to go back to other retailers that they may have temporarily abandoned?
So what are the Walmarts, the Targets of the world? What are they? Is holiday shopping a big thing for those guys as it is for some other retailers? And if so, what are they saying about this holiday season?
Yeah, the holiday season is the biggest season for them, second only to back to school. And so they are really focused on delivering value this year. So Target this morning was talking about thousands of items that are under $25 to try to appeal to that value consumer. Walmart is always a low price provider. We're going to see a lot of promotions this year. We think the promotional environment is going to be much higher, and so there'll be a lot of deals for consumers out there. For Walmart and Target, they're already running Black Friday sales. They're
really
daily deals, things like that. And so, I think consumers are tending to hold back and to spend until they need to. But we've seen some pullback in other areas in the last couple of weeks that would imply that they're saving up and ready to spend on the holiday.
In terms of, we made a big deal about shrink, Jen, over the past earnings season, mainly because I think, number one, so many retailers and businesses were claiming that people were stealing stuff, and number two, we're here in New York and we watch people steal stuff all the time. The cops don't care. Is it still as big of a problem for Target?
It is still a problem, but it is, again, it's an area that's improving. And so one of the takeaways from the call this morning was that they're still expecting shrink to be a headwind for fourth quarter, but not as much as they originally thought it would be. And the impact in the third quarter was not as bad as they thought. So some of the things that they're deploying, whether it's additional security guards, or whether it's video monitoring, or things like fewer self-checkouts, are all strategies that are kind of helping to control that shrink just a little bit.
All right, I'm looking at the COMP function that Matt loves. That kind of compares stock prices over the prior 5 years. Get this, on a compounded annual basis, the S&P 500 is up 12.5%, Walmart up 13%, Target up 12.8%, spot on the S&P 500, spot on each other. Are Walmart and Target are they really at the end of the day just kind of GDP kind of stories, Jen?
Well, I think that if you look at it over a long period of time, you could argue that. And part of it is that they have periods where they outperform, and then they have periods where they underperform based on where the consumer cycle is. So when you take that in aggregate, they do keep stride very well with the S&P. We happen to be in a part where consumers are drawn to value. That would suggest that for companies like Walmart, we've seen strong returns so far year to date on the stock.
Who are the biggest winners if you look over? I look at, I just put in Target, Walmart, Kroger, Albertsons. Albertsons is killing it. I don't know why, but they're doing much better.
Because they're going to be bought by Kroger.
Because they're going to be bought by Kroger. There you go. So, all right, so in the grocery business, are we done? It's Walmart, and now you got Kroger buying Albertsons. Is that it for the business?
There's a lot of consolidation in the industry. It's true, and it's going to still be dominated by the biggest players for quite a long time. A lot of people like to talk about Amazon and Amazon's prospects to really make a big dent on grocery. That's a scenario that we in Bloomberg Intelligence just don't see happening anytime soon. It would require a huge pivot in their strategy to really take significant share away from these market dominant players that you already mentioned.
I've never bought groceries at Walmart. I'm going to have to do that.
I would love to if there were a Walmart around here. Jen, why don't they focus at all on the New York? I guess it's just too urban for them? Too much shrink?
Yeah, they do. Well, it's not necessarily about shrink. It's about finding the right location, right? And having enough of the square footage where it makes it a profitable box.
They can't do it here. Jen Bartashis, Senior Industry Analyst for Bloomberg Intelligence. We appreciate that. Let's head down to Washington, D.C. Amy Morris has got world and national news.
All right, thank you, Paul. This news update is brought to you by the Jewish Communal Fund. JCF helps you respond to crisis swiftly. Open your JCF, a donor-advised fund, now to secure your tax deduction. Visit jcfny.org or call 212-752-8277. President Biden and Chinese counterpart Xi Jinping sitting down today on the sidelines of the Asia-Pacific Economic Cooperation. Bloomberg's Rebecca Chung-Wilkins tells us the leaders are expected to discuss a crackdown on fentanyl manufacturing and the resumption of military-to-military communication.
Interestingly, both of these items are things that the White House, that the U.S. have been pushing for very hard. And that kind of reflects, in some ways, the imbalance in the nature of the China-U.S. relationship at the moment.
Bloomberg's Rebecca Chung-Wilkins. Wilkins says leaders also plan to confer about artificial intelligence, the status of Taiwan, and conflicts involving Ukraine and Israel. A government shutdown is closer to being averted for now. The House has passed new Speaker Mike Johnson's two-tiered plan, but now there are two deadlines to keep this from happening all over again early next year. For more, we're joined by Bloomberg News Senior Editor Bill Ferries.
They've kicked the can down the road to January and February, depending on which government agency you're focused on. It does give Mike Johnson, it gives the House Republicans a little bit of time to kind of strategize about how they want to go forward with their plans for the budget.
Bloomberg News Senior Editor Bill Ferries. Democrats in the Senate have indicated that they are likely to move forward on the spending package. Britain's Supreme Court has ruled the government's contentious plan to send some migrants on a one-way trip to Rwanda is illegal. The ruling is a major blow to a key government policy that has drawn international attention and criticism. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It is 10:40 on Wall Street. I'm Nathan Hager. Stocks are extending their November gains. The S&P 500 is back above the 4,500 level. It's after we got retail sales figures that showed a slowdown in October, though prior months were revised higher, and producer prices unexpectedly declined by the most in more than 3.5 years. Evercore chief equity and quant strategist Julian Emanuel says inflation does look like it's on track to hit that 2% Fed target.
We never want to declare victory on anything because when you get too overconfident in something, that's when markets turn around and beat you over the head. But the fact is whether it's turkey prices, for gasoline prices, for diamond prices, whatever, the trend of lower inflation, I don't want to say disinflation, but the trend of lower inflation is very much intact.
And we do check the markets all day long here on Bloomberg. Right now, the S&P 500 is up 22 points or 0.5%. The Dow is up 135 points. That's a 0.4% gain. And the NASDAQ is up 0.6% or 82 points. All 11 of the main industry groups in the S&P 500 are in the green, led higher by materials, energy, and industrials. 10-year Treasury is down 22 seconds for a yield of 4.53%. Just got word on crude oil inventories from the Energy Information Administration, 3.6 million barrels higher. It's the highest level since August. NYMEX crude is coming off session lows, now down 0.7%, trading at $77.69 per barrel. COMEX gold is down $1 at $1965.60 per ounce. The euro 1.0853 against the dollar, and the yen is at 151 even. That's a Bloomberg Business Flash. Bloomberg Markets continues with Paul Sweeney and Matt Miller.
Nathan Hager, thank you so much. We appreciate it. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio. We're also streaming live on YouTube, so go check that out. We had some retail sales come out, as Nathan was just reporting, a little bit better than the forecast, but a marked slowdown from the prior month. We had Target out with some numbers. They beat today on EPS, but still saying cautious sales environment. Let's kind of dig a little bit deeper into those retail sales and the consumer. We can do that with Jill Blanchard, President of Enterprise Client Solutions at Advantage Solutions. She joins us via Zoom. Jill, what do you make of the consumer out there, the retail sales data we got today, some of the commentary we got from Target ahead of the Walmart release tomorrow? What do you make of retail sales and the consumer?
So first of all, hello, and thanks for having me. I would say that retail sales vary by sector. And if we look at holiday 2023, there's a big focus on it right now. In the recent Advantage Outlook survey, we asked manufacturers and retailers what they expect for unit volume growth for holiday 2023 compared to last year. Drum roll, they're actually expecting growth, 1 to 5% unit volume growth. Just 1% is $2.5 billion in sales, independent of any price increases that, of course, have happened since last year. So that's what manufacturers and retailers are saying about the fourth quarter of this year. The real decider, though, is going to be the shopper at shelf. We also surveyed shoppers to ask them about their intent for holiday purchasing. Most plan to purchase the same, but 20% plan to purchase more. So it could be a happy holiday for CPG.
So are consumers then not struggling? We see that savings have been drawn down. Some people say all the way. Others say, the important, I don't want to say middle class because I don't think that exists anymore, but middle section and higher end consumers still have savings. But we see, credit card usage rising to the highest level ever. We see, rates on that debt very high. We have student loans resuming. Is that not affecting the consumer?
The consumer is absolutely is affected by all of those factors and many more. And what it's really doing is resulting in changed purchase behavior. And we see that in retailers and manufacturer strategy. So retailers are really more focused on that cost-conscious need state with things like private label, promotions, and a focus on value-priced products. Manufacturers also focus on promotions, but also leaning into that in and at home indulgent trend. So as consumers curb their out of home spending, the big ticket spending, they're substituting that with these smaller in and at home luxury and indulgences for both food and non-food. So there are a number of things happening out there that are changing consumption. And again, manufacturers and retailers are taking a different yet complementary approach to addressing that consumer.
So in an inflationary environment, what can retailers and manufacturers really do? Is it do they just compete on price? Is it more promotion? I mean, it's got to be tougher to compete in this inflationary environment than when we had, little to no inflation.
Yeah, price and promotion is super challenging right now. So let's talk a little bit about promotion. Manufacturers want to do more in-store promotions like displays, but retailers actually, over a third of retailers plan to reduce in-store displays, largely in part due to the labor required to execute those. So let's talk about price as well, because price and promotion go hand in hand. Over 40% of retailers plan to shift away from those sales tags at shelf and more to an everyday low price to better compete with the likes of Walmart. The question is the consumer going to recognize the everyday low price? Some shoppers shop a sales tag more than the actual price tag.
Are we going to have like the crazy video that we're going to see on TV this holiday season? I mean, is like Black Friday still a thing, or does everybody just kind of point and click these days?
So Black Friday is no longer Friday, right? So it is a lot more. In fact, there's multiple Black Fridays, and now it's not just Friday. It's not every other, but it's many other days of the week. And so yes, promotions are prolific and more than they have been in the past. What's really critical is to look at the depth of the sale as well. So in some cases, we're seeing a more shallow discount versus that deep discount. But in some cases, we're seeing a shorter promotional window with a deeper discount. So there are a lot of tactics out there that both manufacturers and retailers are trying to ultimately get that shopper to come to their store and get that shopper to buy their product.
In terms of, we did a story yesterday about auto loans and auto sales that are driving their customers broke. And I wonder, Jill, just because you have such great experience in this industry, are there retailers that worry about the health of their consumers, that try and guide their consumers to healthier financial decisions because they need those consumers longer term?
I'd say the world of consumer packaged goods is a little bit different in that consumers will always consume. They'll just consume different. They rarely consume less. The only thing that typically controls consumption is population or age. So it's a matter of capturing what they're going to buy and where they're going to buy it, which of course varies by category as well as inside the home, outside the home. So it's really more about, again, what they're going to consume and where, not so much the volume.
So is it, the narrative has been for a long time that we're out of the pandemic, we want to buy experiences instead of stuff. Other people do. I still like stuff. But is that generally true? And how do you see things developing in that sense?
So I read that same thing, and I think that consumers will migrate towards that. But again, as it relates to consumer packaged goods, I think that we will see a big trend towards the in and at home indulgence. There is a big, well, not big, but consumers have said that they will reduce their big ticket spending. So that could be the new car, the vacation, the home remodel, and naturally want to substitute that for something. And so maybe it is, steak at home or a charcuterie board or a fancier body cream. So I think that we'll see a big growth in the smaller indulgences and luxuries.
Jill, thanks so much for joining us. Always appreciate getting a few minutes of your time. Jill Blanchard, President of Enterprise Client Solutions at Advantage Solutions. You got to be hard to shop for, Matt, because you have everything. And you have very expensive taste. So if I wanted to get you a jacket, I just can't go in and pull one off the rack.
You can't get me a jacket.
I can't get you a jacket, no.
I like...
Or boots. I
have a thing. And I already have enough jackets and boots. But Jill mentioned a fancier body cream, and I was thinking, I need to go over to Kiehl's and get some shaving cream.
You do?
Because I'm about to lop this thing off.
Why? I can't imagine. Why would you do that?
Just was thinking that as I prepare for the birth of my second child, it'll be nice to start it with a clean face.
Really?
And then I'll do, a beard with her growth, with her progression.
All right.
That's
a strategy.
We can market that way.
I haven't heard that before, but you go for it. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
I love that, Matt. Good morning, guys. Advance Auto Part is making its third cut to its fiscal 2023 guidance, and Bloomberg's Simone Foxman says it's a big one.
now sees EPS at $1.40 to $1.80, had previously, just as recently as August, seen $4.50 to $5.10 earnings per share. The estimate was $4.64. Third quarter, a little bit more mixed results. Sales beating expectations slightly, but margins really under pressure, some 36% versus an estimated 43%.
Advance Auto also announced a $150 million cost reduction plan and introduced a new CFO. Ryan Grimsland will join from Lowe's. Shares right now up about 2.5%. A change in leadership at Goodyear. The company said its chairman, CEO, and president, Richard Kramer, will retire next year. Goodyear also announced a new transformation plan, which it says will help cut costs and optimize its profits. Shares right now up about 2%. General Motors may not have an agreement with United Auto Workers after all. Bloomberg's Joan Doniger has that story.
The tentative contract agreement between GM and the UAW is looking shaky. Workers at two big plants have voted it down. More than 60% of workers at the Spring Hill, Tennessee plant and the Lansing, Michigan plant voted no. That sets up key votes at a couple of other large truck plants.
GM up more than 2%. Meanwhile, UAW President Shawn Fain slammed Stellantis for planned job cuts and said it has nothing to do with the union's tentative agreement. Stellantis said it expects to offer buyouts to 6,400 employees. Stellantis up 1%. Those are the company stories we're following. I'm Lisa Mateo.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Another day of green on the screen here. Stocks higher. S&P 500 up 0.5%. NASDAQ up about 0.7%. So building on some of these gains from earlier in the morning. Yields a little bit higher as well. The 10-year Treasury is up 8 basis points here. 4.52% on your 10-year. WTI crude oil, we had some inventory data come out, a little bit more inventory than the market was discounting. WTI crude oil off 1.4%, $77.17 per barrel. Bitcoin up another 2% today, 36,360, so we'll keep an eye on that. Right now, let's head down to Washington, D.C. World and national news with Amy Morris.
All right, thank you, Paul. Today marks 40 days since the war between Israel and Hamas began. The Israeli military has raided the Gaza Strip's main hospital and says it has targeted operations against Hamas. The U.S. confirmed yesterday Hamas uses hospitals and tunnels underneath them to hide and hold hostages. House lawmakers overcame partisan politics to pass a temporary government funding bill that greatly lowers the risk of a shutdown, even as it delays fights over Ukraine aid, border policies, and deep cuts to federal programs. More on this now. Bloomberg News senior editor Bill Ferries.
I think it shows, how much people want to avoid at this point a government shutdown. Republicans, the hardcore, has said that they want to take up bills one by one. They want to see some across-the-board cuts. And they very much don't want to vote for one of these big omnibus bills that puts all of these agencies in one bucket for an up or down vote.
Bloomberg News senior editor Bill Ferries and Senator Chuck Schumer says it is possible for them to vote on the measure as soon as today. New Jersey's First Lady has some political aspirations.
I am so proud of everything we've accomplished, but I know there's a lot more to do. And that's why I'm announcing this. I'm running for the United States Senate, because we owe it to our kids to do better. Right now, Washington is filled with too many people more interested in getting rich or getting on camera than getting things done for you.
Tammy Snyder-Murphy in a YouTube video tossed her hat into the ring, challenging fellow Democrat Bob Menendez, who's been indicted on bribery charges. Murphy has never run for public office, but plays an active role in the administration of her husband, Governor Phil Murphy. Consumers may find some respite from expensive groceries next year as lower agriculture commodity costs cool food inflation. A Rabobank report shows better supply prospects can lead to lower prices for some products like sugar and corn and coffee. Food commodity prices have been roiled for years by the COVID pandemic, extreme weather, and Russia's invasion of Ukraine. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Matt.
Amy Morris, thank you so much. We appreciate it. Well, Matt, Las Vegas' first Grand Prix in 4 decades was supposed to be the latest big sports win for Sin City, but in the days and weeks leading up to Thursday's start of racing, ticket prices and hotel room rates have been tumbling, a sign of dwindling excitement around the event. Liberty Media Corp, the owner of F1, has started to lower profit expectations for the race, blaming unexpected costs. I don't know. There's huge buzz around this race.
Dude, I think there is absolutely massive buzz around it. This story is written by Hannah Elliott.
Yep.
With some help from others. And she knows what she's talking about. She has been following this story from the beginning. She is headed down to Vegas. She's got tickets and a hotel room as well as dinner reservations.
I'm sure she does.
And all of which, is eye-poppingly expensive. But I guess what she's saying is it's not going to bring in maybe as much as had previously been expected. And F1, because of unexpected costs, has had to lower its profit expectations for the race as well. Liberty Media, right, which owns F1.
Exactly. The falling prices raise questions about whether the race's backers overestimated the sport's popularity in the U.S., expanded too quickly, or just charged too much at a time when overall viewership for F1 on TV is sliding. And why isn't there a weird start time, like 1 in the morning or something, East Coast time? I don't know.
No,
something crazy.
Not 1 in the morning.
I don't know. I heard something about that. We'll have to check on that.
But anyway. I don't watch, Formula One because to me,
you don't watch Formula
You already know who's going to win before the race, and
Max Verstappen.
The engines aren't as exciting as to me as they once were. I like the V10s and the V12s, and MotoGP motorcycle racing offers a better experience, in my opinion.
All right, keep an eye on the driver Max Verstappen. He's been apparently pretty dominant in this stuff. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we got some smart people coming through here, and Matt and I are just going to ask a question or two and then shut up because they got some really smart people. Jay Hatfield, CEO at Infrastructure Capital Management, he's going to join us to discuss his inflation call. Chris Whalen, Chairman of Whalen Global Advisors. He's going to discuss the outlook for the Fed rate cuts. Wow. And we'll talk banks. I got a couple really smart folks there. Tina Marriott Larson, COO and President at Recursion Pharmaceuticals, discuss her company's recent performance and the outlook for the biotech and pharma space. So, again, some smart discussion coming up. And we're going to kick it off with another smart voice. That is Nathan Hager down in Washington, D.C. He's got a Bloomberg Business Flash.
Okay, Paul, thank you. Watching stocks extend their gains. The S&P 500 is back above 4,500. Not the same kind of pace that we saw yesterday when we got that cooler than expected October consumer price index, but we did get retail sales that fell a little bit less than what Wall Street was expecting, and producer prices that came in with a big drop, a 3.5-year drop in terms of the fall in producer prices. So can we call this mission accomplished for inflation? Diane Swank is chief economist at KPMG.
Not mission accomplished because the Fed is still going to hold rates higher for longer, but we're done with rate hikes. And that's what we've been saying, and that's what we believe. That's the good news out there, is that it does look like the soft landing is probable, but the journey is not yet over.
And we check the markets all day long on Bloomberg. Right now, the S&P 500 is up 0.5% or 24 points. 4520 is the S&P level. Dow Jones Industrial Average up 0.5%, up 167 points at 34,995. The NASDAQ is up 0.6%, up 88 points at 14,182. All 11 main industry groups in the S&P 500 are in the green right now. 10-year Treasuries down 19/32, yield 4.52%. The 2-year yield is at 4.90%. NYMEX crude's moving lower again, down 1.5% to $77.06 per barrel. COMEX gold is little changed at $19.68.680 per ounce. The euro 1.0869 against the dollar. The yen is at 150.88. The outperformer continues to be Target after earnings. Those shares are up 18%. That's a Bloomberg Business Flash. Bloomberg Markets continues with Paul Sweeney and Matt Miller.
All right, Nathan Hager, thank you so much. We appreciate that. Paul Sweeney, Matt Miller here in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. And now we are actually in your dashboard with Apple CarPlay and Android Auto. It gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. How do you get it? Well, first of all, it's free. That's good. And it is free with the latest version of the Bloomberg Business app. That's the Bloomberg Business app. Get it on your iPhone in the Apple App Store or on Google Play. Just download the app and connect to the internet, and boom, there you go. And it's all presented and sponsored by our good friends at Interactive Brokers. So some good stuff there. We appreciate that. Another good day for the markets here, backing up what we saw yesterday, which was just a really, really strong move in the stock market. S&P now is up 0.5%. Jess Metton joins us. She covers all the markets for us. Jess, what's moving today?
Well, looking at more broadly for the S&P 500, you have more than 50% of stocks trading above their 200-day moving average. And then on the shorter term, more than 90% are actually trading above their 20-day moving average. So that's more kind of a bullish trend in the shorter term. But obviously, we've seen stocks, especially the S&P 500, even coming in today, it already closed higher in 10 of the past 12 sessions. I was going to bring up RSI, which I know is Matt Miller's favorite to talk about, but if you look at the S&P 500, it's at 69, so right under 70, and for the NASDAQ 100, if you round it up, it's right at 70 there. So I was speaking
and 70 is
so
overbought.
That's supposed to be considered a level to be overbought, and then 30 is the oversold. But I wanted to see more kind of in history, because actually, if you look back at the S&P, it was in late October October when it fell below 30. So it's taken less than a month, about 13 trading sessions to get close back to that. So Andrew Thacher, he's a portfolio manager and a technical analyst over at Financial Enhancement Group who was sort of crunching the numbers. So if you go back to the 1950s, there's only been about 11 instances where that's happened so quickly for the S&P 500, and then 21 days later, nearly 82% of the time, the S&P 500 averaged a median gain of 2.4%.
I wonder how high it's gotten overbought. Has it ever hit 80 on the RSI? You think it's ever hit 90 on the RSI?
You can find that in the Bloomberg terminal if you go back.
If you go back,
I'm going to go back to 1999.
There we go.
Just because I'm a Prince fan. And yes, it's gotten pretty high. Yeah. I see it up at
95, 96.
Yeah.
Back in 1998. Boy, those were some
and
good years.
in
2018.
2018, right. It got close to, what was that, around 87 if you round it up. So that was a fun years back during the trade war, sort of.
Oh, yes.
Right? What do you think back pre-pandemic? It's almost like another lifetime
Speaking
ago.
of Biden, Xi.
Right.
I mean, it's not like the trade war is over, right?
Yeah.
I feel like every time I hear someone commentating, and maybe this is from a political perspective, they say it's worse now than it was then. So it's like maybe good weather today, but climate change is still happening.
I remember those days whenever there would be different headlines coming out with the different levies, and then you would see, especially industrial stocks, retail stocks, take off in different directions depending on what the headlines were. So that was an interesting time. And then, of course, going into 2020, as a markets reporter, I was thinking, all right, well, we're going into an election year, and then of course the pandemic happened. So that was an interesting time period to be a markets reporter. But some other stocks I'm taking a look at this morning. Of course, everybody taking a look at Target. So TGT is the ticker symbol on that, up 18% now. So on pace for, if it does hold those gains, it would be its best day since August of 2019. So especially when people are thinking about the holiday quarters, obviously this is backward looking because we're looking at the third quarter, but it did post a third quarter profit that did top forecast. And then also this was another
Can you
company.
imagine, like, you're a company, giant American retailer, and you say, same-store sales fell 4.9% in the quarter after falling 5.4% in the previous quarter.
Yeah.
And everyone says, oh, but that's probably because prices were falling. No, prices were still rising. Really? Let me buy that stock.
Right. So that was its second straight quarterly drop. And unfortunately, it was driven by lower spending on discretionary categories. So even though that declined, it was the second largest since 2009 when you're looking at those percentages we were talking about comparable store sales. It was still less than analysts were expecting. So it looks like because it wasn't quite as bad as feared, apparently, that still helped boosting that stock. And then actually after the bell today, we'll be hearing from Cisco as well as Palo Alto. So those are two stocks to keep in mind after the closing bell. So if you look at Cisco, ticker symbol CSCO, that stock's up close to 12% this year. If you look at Palo Alto, ticker symbol PANW, it's up 86% this year. So that would be its best year since 2014. So those are two stocks to keep a close eye on after the closing bell. Obviously tomorrow, Walmart, Macy's, other retailers coming up.
By the way, I'm on Target.com on the website, and I go into the search box, and it shows me the top 10 trending searches. Yeah. Number 1 is women's sweaters. I don't think that's too crazy. Okay. Number 2, Christmas pillows. Boom.
'Tis the season.
Kind of weird that that's the second biggest trending search on Target. Hey, let me get some Christmas pillows.
Well, it's that
then
time.
pot holders.
Pot holders. Okay.
I love a good pot holder. And mouse traps.
Wow, I wasn't expecting that one to round out the top 4 or 5 then.
At least the top couple are categories in which prices have actually been coming down, right? We heard from Jen Bartashis that cotton, for example, the input costs there are coming down. I don't know what the input costs are on a pot holder.
How about mouse traps?
Wow, gotta watch out for those
it's
rodents.
Just wood and it's copper, right?
I don't know.
Copper, I think.
I don't have a mice problem.
Okay.
I have people for that.
The Sweeney compound does not have mice.
Yeah, we do not. I'm like, they know better to come down to Jersey Shore.
They're like, get out of here.
Away. All right, very good. Jess Menton, thanks so much for joining us. Jess Menton, she covers all the markets for us. Jay Hatfield joins us. He's the CEO, founder, and portfolio manager of Infrastructure Capital Managers Advisors. He joins us here live in the studio. He doesn't phone it in, folks. Jay, there's no inflation out there. You've been saying this for a long time. Inflation's been coming down. CPI data this week, PPI data this week. Did that surprise you at all? Because it seems like it's a positive surprise for the market.
Thanks, Paul and Matt. Well, we've been pretty public. We put out a piece on October 31st, and we said this on national TV last week that the CPI and PPI would print cool, but that's not because we speak to God or anything. It's just simply that we focus on oil prices and energy prices as a leading indicator. And what's not appreciated, even by our Federal Reserve, which is hard to believe, is there's a substantial bleed through of energy prices to core, and we did see that. If you think about it, there is no business in the United States that doesn't use energy, but some use a gigantic amount of energy. So food is 40% energy, airline fares. So you get both an immediate bleed through, particularly on airline fares, eventually to food. And so that's one reason we've been bullish and thought the rates were too high at 5%. We thought they'd come down to kind of this range. They might stall out around here. But I would focus on energy. And then also the other strange point about this report is we kind of already know next month's report. So you don't have to...
In terms of CPI.
Yes, because what happened, which is pretty unusual, is that it was sort of like a bell went off the first day of October, and gasoline ratably dropped 10% during the month.
Yep.
So guess what? Only 5% was reflected in October, and there's going to be another 5 next month, and we're already halfway through the month, so it's unlikely to skyrocket. And also, retail has lagged.
And just to that point, the daily national average gasoline price, regular unleaded, $3.34 today. It was $3.90 just back in mid-September.
Right, and we kind of know that that will decline for the rest of the month, because what happens is when wholesale comes down, there's a lag because you have inventory in the channel.
Yep.
So the chances, we kind of already know that we're going to have a cool CPI and PPI, both headline and core, for next month as well. So that's pretty bullish. But
Now the core is what really counts, right? Because the energy prices really are transitory. The swings that we've seen just in the last year show you that. I quote your CPI-R index quite often, which is your own proprietary index. I find it on the infracapfunds.com page. And it's come down substantially compared to what the BLS gives us. Their core CPI right now is 4.13, right? And yours is, oh, sorry, this is September, but it was 4.13 and yours was 1.3%. After having come down below 1.
Right.
Yours was also higher than the highest core CPI back in June of last year. So it was higher, it's been much lower. Do you think it's possible that inflation resurges again?
Well, I wouldn't totally ignore the energy price dynamic, because that does feed through to the whole economy.
It has knock-on effects.
And keep in mind that we have an 80% cost advantage on natural gas, too, because we're the Saudi Arabia of natural gas, and that affects electricity. So it is a long-term bull factor that we have low energy prices in the U.S. But with regard to the
potential for a resurgence in inflation.
So the answer is there's a little bit of a sign of that, and that's why it's better to look at Case-Shiller than the ridiculous stuff that the BLS puts out. So we actually have had, like, for instance, we just marked we didn't update our website yet, but we just put out a release yesterday that now our measure's up to 2. So because Case-Shiller is actually ticking up. Now I would still argue.
I see, so it was 1.3 in September. In the month before that, it was like 0.89. And now it's at 2. So your index is indeed coming back up.
Right. So, I mean, if the Fed was ever looked at it, of course, they might start to be worried, but they're worried about what it was like a year and a half ago. So, but I would still say that the chances of rates skyrocketing with the Fed having short-term rates above 5 and mortgage rates almost at 8% is pretty low. It's not impossible, but it's pretty low. So we're not really concerned about that. We think it's kind of just normalizing. And also rents do matter. And there are a lot of apartments coming online in the next year. So the chances of a big resurgence in housing costs are pretty low. And then it's not really going to affect Fed policy, because it would take them 18 months to figure out that it was actually happening.
So what are we doing here? I know you're still bullish on bonds here. So how are you guys kind of positioning yourselves these days?
Well, you know, we sort of are the self-proclaimed preferred stock kings.
Okay.
So we love, it is self-proclaimed, by the way, but we love preferred stocks. If you really look at it, particularly funds like ours, have actually outperformed like almost all other fixed income. So they have higher coupons, which means they have lower duration. You can look all this up in the terminal because duration is kind of hard to calculate. And what also happens with preferreds, a lot of retail investors sell them in downturns, so you can buy them well below par. And then the final thing is very unusual about the asset class. It's has a lot of fixed to floating. So our fund's about over 50% fixed to floating. And why that's important is that all these rates were set when Fed funds was at 2, they're bumping up to 5, so you're getting a 3% bump in a good portion of it. So we would urge investors to take a look at that. You can buy funds like ours, or you can do it directly. If you do it directly, you might want to get a terminal, though, because it's pretty complicated. You have to look up all the...
Yes, you should get a terminal.
Yeah.
Thanks for the pitch.
You can use the infracapfunds.com website for your inflation data, everything else on the Bloomberg terminal. Jay, we called you in here because the EU says that the euro area and its biggest economies are going to avoid a recession. You've been bearish on the European Union. What do you think is going to happen in that economy?
Well, we prefer real-time data as opposed to like econometric models. And so if you follow the recent data, even this morning on ECO, Eurozone, there was a terrible industrial production report that came out. I think it's down over 1%. But also you can access on the web the equivalent of the Atlanta GDP now. And so the Eurozone GDP now is tracking at a negative 1.2% annualized rate. I mean, the quarter's early on, to be fair, but that was also, presaging that we would have a recession last quarter too. And then all that's just the individual data is terrible. And there's no bull case because we had 2 rate increases last quarter. And keep in mind that 45% of mortgages are floating rate in Europe. So those increases haven't even yet shown up in retail sales. So and they, of course, don't have the energy cost advantage. They don't have any of the advantage of the U.S. They don't have a shortage of housing. They don't have counter-cyclical infrastructure spending. Their natural gas prices are 5 times ours. Wow. So we have a big, so they're really kind of a disaster, and our data shows. And I wouldn't be too focused on your official forecast because they update them they're a little bit like the BLS. They update it every 6 months. So you'd be the last
Industrial production in the Eurozone fell 1.1%. That was worse than expected. That data just out about 10 hours ago. And industrial production year over year was down 6.9%.
So it's just awful. It's just flat out
very
awful.
bad.
Yeah. All right, Jay, thanks so much for coming in again. Really appreciate it. Taking a walk across town. Jay Hatfield, he's the CEO. He is the founder, and he's the portfolio manager of Infrastructure Capital Advisors. They like preferred stocks. You don't hear that too often. That's pretty cool. This is Bloomberg.
Thanks, guys.
Let's get some company news with Lisa Mateo.
You got it. Sources tell Bloomberg SpaceX is discussing an IPO for its fast-growing Starlink satellite business as soon as late 2024. Bloomberg's Ed Ludlow talked about it earlier.
What SpaceX is doing is moving Starlink and Starlink's assets into a subsidiary, incorporating it as its own private entity, a wholly owned subsidiary of SpaceX, kind of a stepping stone towards that. But immediately following publication of our reporting and our story, Elon Musk tweeted or posted on X, the platform formerly known as Twitter, false.
Yes, just one word, false. Meanwhile, Musk's other company, Tesla, is changing its rules on the Cybertruck. Business Insider says a previous resale clause, which said the company would file a $50,000 lawsuit against buyers who sold their Cybertruck within that first year, well, it's been removed. The Cybertruck hits the market at the end of the month. Tesla shares up about 3%. Well, if you're thinking about joining ChatGPT Plus, you may be out of luck.
The paid ChatGPT Plus service is in such demand that OpenAI says it can't keep up, so it's hitting the pause button on accepting new users, saying it needs to catch up to ensure a great experience for everyone. The AI startup says about 100 million people use its services every week.
That was Bloomberg's Steve Potus reporting. And NVIDIA was on track to rise for a record 11th session thanks to an update to its AI processors. But experts said a spike in its relative strength index, well, that could be a sign of overheating. And they could be onto something. Shares of NVIDIA right now down about almost 1%. Those are the company stories that we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
Coming up to 11:22 on Wall Street, I'm Nathan Hager. We check the markets all day long on Bloomberg. Stocks continue to hold on to gains after the latest economic data, the less than expected decline in retail sales, and a big drop in producer prices, the biggest in more than 3.5 years. Right now, the S&P 500 is up about 0.5% or 20 points. The Dow is up 0.4% or 130 points. And the NASDAQ is higher by 82 points. That's a gain of 0.6%. All but one of the main industry groups, all of the 11 on the S&P 500 are in the green. Utilities is the only one that's dropped into the red now. The biggest performer on the S&P 500 index continues to be Target after the blowout third quarter earnings. Those shares are up 18%. Vertex Pharmaceuticals, the biggest laggard on the S&P, down 3.8%. 10-year Treasury is down 22 seconds for a yield of 4.53%. The 2-year is at 4.90%. NYMEX crude's now down 1.6% at $77.03 per barrel. COMEX gold is little changed at $19.6570 per ounce. The euro, 1.0864 against the dollar. The yen is at 150.92. Microsoft has unveiled its first homegrown artificial intelligence chip and cloud computing processor. Did that at its annual Ignite conference. Also announced some new software for clients to design their own AI assistants. Microsoft shares are up 0.2%. That's a Bloomberg Business Flash. Bloomberg Markets continues with Paul Sweeney and Matt Miller.
Nathan Hager, thank you so much. We appreciate that. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. I want to check in with our next guest right away, Chris Whalen. He's the chairman of Whalen Global Advisors. Chris, thanks so much for joining us via Zoom here. I mean, you look at this market over the past couple of days, it's basically telling you inflation is whipped. We've seen peak rates. What do you take away from some of the data we've received over the past couple of days?
Well, the fact that we're looking at data of this maturity tells you something. We should take a somewhat more nuanced approach, I think, to rates because the volatility has been so enormous one way and another. And also the quality of, forward rates, for example, the 30 and 60-day rates in the mortgage market, which is the foundation of the treasury market, by the way, has been all over the place. So today I would tell you the belly of the curve, that contract closest to par, is still a 6.5 to a 7. So that means to make money, you have to be writing 7.75% mortgages, if not 8s. You know what I mean? So things have yet to settle down, even though we rallied a point in yield over the last, week? The aspirational aspects of this, I think, cannot be dismissed.
So you've got to be writing higher rate mortgages. And how is the mortgage outlook right now, Chris? Because the housing market seems to have ground to a halt, at least in terms of existing homes, which means probably very few people are going out and getting those mortgages.
Well, it's largely a cash buyer's market today. You're seeing compression above the median, which is about $450,000, by the way. The average is $330,000, I think, if you look at the mortgage bankers' data. So, the way I would say it is we were dragging the yield curve up. So it's been very hard for lenders to make any premium when they sell their loans into the bond market. And that's changed a bit. You may also see some lenders have a good quarter because of the rate rally we've seen. We had a pretty decent quarter in the second quarter for a lot of publicly traded lenders as well. So when the sun shines, they make hay. And I think, we'll just have to see because the next auction, we could be having a tough time. And you could see rates back up again. So for, mortgage lenders, you lost a lot of money on your hedge, but you're making a lot of money on the assets that you have.
By the way, the last auction or the auction last week that, kicked things off before Powell came out and confirmed what looked like a more hawkish bias. Was that actually affected by the ICBC hack? That's what the early reports from the FT said, but I just don't get it.
I don't know if there's a connection there. I do know that some very smart people whom I have a lot of respect for that run banks are extremely concerned about that hack, even though it was small, because it implies that they're not sufficiently vigilant in terms of operational risk. At the same time, as you saw, I worry that Secretary Yellen was essentially backed off and forced to downsize the long bond auction because the dealers told her it wasn't going to get done. And you still had a spike in rates, Matt. So that worries me. It reminds me of when I was a little younger and we used to worry about Treasury auctions. We haven't had that worry in 20 years.
Yeah, but now it moves markets. Now we had a bad auction, and 3 minutes later you saw the tail and the S&P 500 sold off. It makes you think maybe Yellen and whatever you call that Treasury Committee had a point when they decided not to sell 100-year debt at zero interest.
No, they should have done it. Come on. You're a fund manager. It doesn't matter if you work at the Treasury or not. You obviously should have done that trade. You should have funded infrastructure when that trade was available. We didn't do it. We just spent the money. So I think there's always second guessing. But today, I think Treasury is facing a lot of tactical challenges. And that's just the reality. And it will affect stocks, no question. The banks are down. Are they cheap? I don't know. It depends which bank, right?
Exactly. Hey, Chris, what we're not hearing about too much recently is the commercial real estate exposure for a lot of these banks. What's the latest on that?
Oh, it continues. You're not going to see most of it because it's private. This occurs behind closed doors with lawyers, and these are professionals on both sides. But if you look at some of the specialty press, like The Real Deal, which I love, by the way, there's a lot of stuff going on. There are assets that are being marked down. You're going to see a wholesale markdown of rent-stabilized assets in New York after the FDIC is done selling the Signature Bank properties, so rent-controlled properties that, frankly, are unsaleable, but they're going to try. My fear, and I think a lot of people's fear, is that they're going to hit a very low bid to get out because ultimately the receivership of the FDIC is not a long-term investor. They're there to turn the assets into cash and try and minimize loss. That's their mandate. So, they have retained a majority stake in a lot of these buildings, Matt, because nobody wants them, given the political environment in New York.
Well, I have been reading
2019 rent control legislation has to be repealed, or we're going to destroy rental assets in New York as an asset class because the banks can't fund them. They can't.
I mean, and residential doesn't even look nearly as bad as office, right? Because you mentioned The Real Deal, and I've been reading that website lately, realdeal.com, because we had this guy in, Yigal Namdar, who I think I think it's fair to call him a billionaire. Certainly when we last vetted his holdings, he was in 2021. It's like he and a couple of other guys with whom he works are the only people buying office in New York. No one else is trying to catch these falling knives.
Well, you have to have a view of the real estate value that is to say the land, and then the asset that's on it, and whether or not it can be utilized in what's going to be a different business case. I think a lot of people see New York going to a largely residential configuration, but I don't think you can pay for this city unless you have business as a partner. And that's what's got to change. We have got to stop attacking the business community because they'll leave. And they did, but they went down south and built a lot of new buildings, and now we're overbuilt in Texas. We're overbuilt in some other markets. No, seriously, the herd left. They were told to leave, by the Democrats of New York, and they did. Because the capital is mobile. Miami, Matt, you spent time down there. Insane. And then look at around the region. Look at the canal zone. Look at some other cities in the region. They're all getting buried in investment in commercial real estate, residential real estate.
I hope what happens in Miami stays in Miami, because I have spent some time down there.
Look at the
but
canal
I don't want to talk
zone.
about it publicly.
Look at the canal zone in Panama. It looks just like Miami. Big empty buildings.
Yes. Okay. Hey, you write a lot for the Institutional Risk Analyst.
Yes.
And one of your posts recently, Big What, Rising Debt Service and Falling Liquidity, you're writing about, the mortgage and the lending business, but I'm thinking about the U.S. And I wonder what is your take on the fact that we're going to have $900 billion in interest rate servicing costs next year. Does that change? Do you see rates coming down and that gets better? Or is that something that Washington can fix somehow?
Well, Washington has got to start reducing the deficit. I know that's not fashionable, but from a tactical perspective, just looking at the cash balances that Treasury has to maintain in order to move payments around, it's a problem. You know, the Fed collateralizes all of that, Matthew. They go out and buy bonds to collateralize the Treasury general account, and that's a market-moving event too. So the size of the Treasury is becoming an issue in the markets. We're seeing crowding out come back as a novel concept, right, in economic thinking, because it's so obvious. You know, luckily housing is down. Imagine if we were trying to finance $4 or $5 trillion this year in housing. At the same time, Treasury was out raising all this money. We're going to do $1.5 trillion this year. Nothing.
All right,
So,
Chris, I got to wrap you up there, unfortunately, for time. But Chris Whalen, love to get your insight on the industry. He is the institutional risk analyst and also chairman of Whalen Global Advisors. Paul?
Yep, absolutely. Looking at these markets, still up 0.4% here. So keep it on to some of those gains here. Let's head down to Washington, D.C. right now. Amy Morris has got world and national news.
All right, thank you, Paul. This morning, Senate Majority Leader Chuck Schumer said that he wants to work quickly to pass that stopgap bill to avert a government shutdown.
Today, my Democratic colleagues and I will work with Republicans. I will work with Leader McConnell to see if we can come to an agreement to accelerate this bill's passage. If both sides cooperate, there's no reason we can't finish this bill even as soon as today.
House lawmakers overcame partisan animosity yesterday to pass a temporary government spending bill that greatly lowers the risk of a shutdown, even as it delays fights over Ukraine aid, border policies, and deep cuts to federal programs. President Biden and Chinese counterpart Xi Jinping sitting down today on the sidelines of the Asia-Pacific Economic Corporation. Bloomberg's Rebecca Chung-Wilkins tells us the leaders are expected to discuss a crackdown on fentanyl manufacturing and the resumption of military-to-military communication.
Interestingly, both of these items are things that the White House, that the U.S. have been pushing for very hard. And that kind of reflects, in some ways, the imbalance in the nature of the China-U.S. relationship at the moment.
Bloomberg's Rebecca Chung-Wilkins. Wilkins says leaders also plan to confer about artificial intelligence, the status of Taiwan, and conflicts involving Ukraine and Israel. A new government report shows the effects of climate change are rampant throughout the U.S. and will get worse over the next decades with continued fossil fuel use. The fifth National Climate Assessment shows that planet warming pollution in the U.S. is decreasing, but it is not decreasing fast enough. A Michigan Court of Claims judge has ruled that former President Donald Trump will be on the ballot for the Republican primary in the state. Opponents tried to use a Civil War-era clause to keep Trump off the ballot as they cited insurrection provision of the 14th Amendment. The judge says that Donald Trump followed state law to qualify, and he can't remove him. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
11:40 on Wall Street. I'm Nathan Hager. We check the markets all day long on Bloomberg, and right now the S&P 500 is up 13 points, or 0.3%. The Dow is up 74 points, or a 0.2% gain, and the Nasdaq is higher by 55 points. That is a gain of 0.4%. The 10-year Treasury is down 26 seconds for a yield of 4.55%. The yield on the 2-year is at 4.91%. Stocks are extending their November gains. Treasuries are tumbling after better than expected figures on October retail sales and a big drop in producer prices. Anastasia Amoroso is Chief Investment Strategist at iCapital.
The chase into year end is on, and it's going to involve a lot of stakeholders, whether it's the systematic traders, whether hedge funds that were caught too short, whether it's all the cash, $8 trillion of it on the sideline. So I do think that I was initially going to say drift higher into year end. Based on yesterday, we might rip higher into year end, but I do think we finish higher.
And you can hear more from iCapital's Anastasia Amoroso on the Bloomberg Surveillance podcast. NYMEX crude now down 1 3/4%, down $1.38, trading now below $77 per barrel at $76.85. COMEX gold is down 0.2%, down $2.90 at $1963.60 per ounce. The euro at 1.0851 against the dollar. British pound 1.2431. The yen 151.06. Bitcoin is up 2.2%, 36,300 for one of those tokens. That's a Bloomberg Business Flash. Bloomberg Markets continues now with Paul Sweeney and Matt Miller.
All right, Nathan Hager, thank you so much. We appreciate that. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Well, we know the stock market likes biotech. The stock market likes AI. So how about an AI-inspired biotech company? And how about an AI-inspired biotech company that has a new shareholder disclosed just today? That would be Cathie Wood's ARC Funds. You put it all together, Matt, the stock's up 16%. We're talking about Recursion Pharmaceuticals. The symbol is RXRX. And we just happen to have Tina Marriott Larson, the president and COO of Recursion Pharmaceuticals, with us. So that's a coincidence, a serendipity, I guess. I don't know what you want to call it.
That's a face-ripping rally.
Face-ripping rally. Tina, what have you learned about your new shareholder today?
Well, thank you. I don't usually use the term face ripping, but I appreciate the introduction. Great to be here, Paul and Matt. And yeah, like all of our shareholders, it's great to have these strategic, long-term thinking shareholders that really share our vision for the future of where the biotech industry going, the tech industry is going, and really the opportunity to use technology to create the next generation of biopharmaceutical company.
So what kind of strides are you making? Because, it's great to have a very famous and, followed shareholder. It's great to see your stock take off in double-digit gains. But at the end of the day, I imagine your ultimate goal is, I guess, curing cancer, right? I see that you do a ton of oncology work in partnership with some of the biggest names in the business. So how is adding AI to the mix getting you closer to that goal?
Yeah, absolutely. Cancer is a big focus for us. And as you mentioned, our partnerships, we recently announced an expansion of our long-term partnership with Bayer. We're going to be working on up to 7 new oncology programs with them, applying the latest and greatest version of our technology platform. In October, we announced the first milestone and option from our partnership with Roche and Genentech, which was in oncology as well. And so we're definitely focused on oncology as well as other areas like neuroscience, once again with our partners at Genentech Roche. So we're really seeing great progress in applying these technology platforms, this emerging field of tech bio, to really improve the outcomes in the way that we do R&D research to discover new.
Well, what are the most important breakthroughs that you've made, or what are some breakthroughs that you're hoping to make? This is what these are the moonshots that Wall Street bets on. What's yours?
Yeah, absolutely. And so we are industrializing drug discovery. So if you think about the way that many small biotech companies, maybe they're looking for 1 or 2 drugs in very targeted areas of biology or very specific areas, say of cancer, we're actually looking across human biology. Our mission is decoding human biology to radically improve lives. And we're using the technology to do that. And so you see that we have bets in neuroscience, we have bets in oncology, we have our own internal pipeline of molecules in things like rare disease and oncology, and we're actually going to see our first readouts. We're anticipating those next year for our internally developed drugs. But ultimately, the goal is to scale and industrialize so that, you know, in the same way that other industries have been disrupted by technology, so that we can bring better medicines to patients faster and more cost effectively.
So specifically for your company, Recursion Pharmaceuticals, what do you guys do? What is your technology? How do you bring AI or just technology broadly defined to the, you know, the pharmaceutical and the biotech space?
Yeah, it really starts with data sets. And so I like to use the Google Maps analogy quite a bit. I'm old enough to have navigated around, say, Washington, D.C. using a Rand McNally atlas, and that was pretty hard, and you know, at night after you like land there on a plane. And so, and what Google Maps revolutionized that part of our lives by both creating great data sets of the earth, of cities, of maps, and also creating the algorithms and computational technology in order to analyze those large data sets. So the analogy to what Recursion is doing is that we are creating data sets. We have 20 petabytes of data, 25 petabytes of data, actually, it grows so fast, that we have actually grown in-house here in our laboratories. To the right of me, there's a whole bunch of robots doing science right now, creating these in-house data sets, modeling the human body right here in the laboratory. And then we add data sets, like we recently announced that we have developed a partnership with Tempus, and they have real world data. So we have preferred access now to over 20 petabytes of data from 100,000 actual cancer patients, and the outcomes that those patients have had out in the real world. So we're constructing these very large data sets and then using tools like machine learning and artificial intelligence in order to use that model of biology to find new medicines for diseases that today are underserved or unserved and have been intractable previously for the industry to find cures.
It's hard for a normal person to know what a petabyte is. Even if you,
I think it's a lot of numbers.
Even if you Google it, apparently it's 1,000 terabytes.
What's a terabyte?
I don't know.
So I think one of the fun analogies we have used here is that if every high definition film ever made is a few petabytes, and so we have far, far, far more data than if you streamed every movie ever made in high definition. So these are very, very large.
Nice. Paul is actually on a mission to do that right now.
Exactly.
He's streaming every single HD movie on the New Jersey Transit.
Yep. So Tina, I mean,
like 1,000 years, Paul. But good luck.
I know. I have a long commute. So Tina, talk to us about, is the biotech industry, is it open to this type of technology coming into what has been historically, you know, just very, I don't know, sciencey stuff?
Yeah, I think the openness is growing. You know, my background, I spent decades ago at the revolution of biotechnology. I was at the Genentech, the company that led the biotech revolution of our industry when we hit an R&D. They're one of our biggest partners now, and now being at this leading of the tech bio revolution. And even a few years ago, when I joined our co-founder and CEO, Chris Gibson, here at Recursion, there was still a lot of skepticism about how AI and technology was going to change things. I think now that artificial intelligence has become so much more broadly impacting our lives, you know, across industries, now that kind of skepticism really has switched to curiosity. And I think now you see large pharmaceutical companies really trying to craft their AI strategies, getting really curious about how this is going to revolutionize the companies. And so I think we've kind of transited most of that skepticism as to if technology and computational technology revolutionizes the industry. And now the question is how.
Hey, Tina, really fascinating discussion. I really appreciate it. Tina Marriott-Larson, President and COO of Recursion Pharmaceuticals. Ticker symbol is RXRX. It's a NASDAQ-traded stock, and it was just disclosed today that Cathie Wood's ARK funds have acquired a stake in this company.
But our producer, Eric Molo, booked Tina for the show before we knew that. And in fact, he booked Chris, the founder, back in July.
Wow.
So he essentially beat Cathie Wood to it.
I know. Now, did he buy any stock, did Mr. Molo? I'm guessing the fact that he's still back there behind the other side of the glass, that the answer is no. But we appreciate the booking nevertheless. We'll have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Target shares, they are soaring right now. They're up about 17% after third quarter earnings outpaced forecasts. Bloomberg's Kriti Gupta explains what else is contributing to that rise.
Not only did they beat some of the revenue expectations, their profit really showing up quite a lot. Their adjusted EPS as well coming in about $2.10, beating the $1.48 estimate. But here's why you're getting the extended jump. Target is also talking about a decline in inventories. And this is really significant because we know as the inventory story in retail has been really sticky.
And that inventory, well, it was down 14% from a year earlier. Kroger is facing a possible class action lawsuit. The supermarket chain is accused of sharing health information of online pharmacy patients with Meta platforms and other third parties without patients' consent. Right now, Kroger, that's up about 0.5%. Meta platforms down about 0.5%. And forget extra vacation days or flexible work schedules. Job hunters are looking for weight loss drug coverage. And Bloomberg's Gina Cervetti says companies are listening.
The craze around pricey weight loss drugs has many people clamoring for these treatments in company-sponsored health plans. The HR firm Mercer found that while less than half of large employers currently cover the new generation of obesity drugs, an additional 18% say they are considering adding them amid surging interest.
Shares of Wegovy and Ozempic maker Novo Nordisk right now down about 1.5%. Eli Lilly down 3%. And sources tell Bloomberg that Value at Capital has built a stake in Walt Disney. Representatives for both companies didn't respond for comment. Disney shares up 3%. Those are the company stories we're following. I'm Lisa Mateo.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Yeah, all right, interesting. Microsoft's had some interesting news today. We always like to talk about Microsoft because a lot of folks on Wall Street like this. Microsoft unveiled its first homegrown artificial intelligence chip and cloud computing processor in an attempt to take more control of its technology and ramp up its offerings in the increasingly competitive market for AI computing. Anurag Rana, supposedly he knows this stuff. He's our senior technology analyst for Bloomberg Intelligence. He's out there in that tech hub of Chicago.
The Windy City.
The Windy City. How was your commute today, Anurag?
It was very nice.
All right,
Thank
good
you
for
for rubbing it in.
Yes. All right, what's Microsoft doing here? I mean, are they just trying to say we can't depend on the NVIDIAs of the world? We got to bring more of this stuff in-house?
Yeah, I think this has been this is something that we will see from all major cloud providers, including Amazon and Google, because one of the things you have to do is you cannot just depend on one company to furnish all these chips. The demand is way too high right now for a lot of AI-related computing, and all these companies will, over time, come up with their own chips. Now, that doesn't mean it will de-risk them from NVIDIA. It's just that for different workloads, they are coming up with different areas. Apple really showed a lot of these companies that coming up with their own chip really helps sell the hardware product. Apple's M1 product has really one chip has really helped them sell the MacBooks, and I think that's really a lot of investments going in, individual custom silicon for all the major cloud providers.
By the way, I was looking at Microsoft stock versus Google and Amazon and Salesforce, and they're crushing it. Over the last 5 years, total return, Microsoft shares up 262%. That's better than all of those competitors I just listed, but not nearly as good as NVIDIA. Obviously, they're up 875% over the last 5 years, but almost all of that has come this year. Can Microsoft catch up with NVIDIA?
No, I mean, I think when you look at the size of Microsoft, it's, probably 1/3 of the entire software industry. It's growing faster than the industry. And frankly speaking, when you look at the individual pieces or the individual subsegments or products that they have, I have no doubt that at least in the next 3 years, they will grow faster than the software industry, coupled with margins, even if we discount the entire Activision, acquisition. So there are very few companies that are so well placed in the next phase of digital transformation, AI, after NVIDIA. I think Microsoft really, fits that bill.
How much of Microsoft's total sales, how much is software? How much is hardware? What's that breakdown look like?
Oh, it's majority software. I mean, the hardware is a very small portion. I don't remember off the top of my head, but I think it's far less than 10%. Because they, even in the case of PCs, they just sell the software. It's the Dells and the Lenovo's that is driving the hardware sales.
Well, I just think of the Xbox, Anurag.
Yeah, well, it's too small. It's too small. I'm sorry. That's my man.
No, I know you're right. I just was wondering.
Okay. Hey, I expected NVIDIA to be off a lot on this news. It's only off 1.5%. So I guess that's the market saying we're not too concerned about NVIDIA's place here.
Oh, no, not at all. I mean, the demand for these chips are going to go on for a very long period of time. There is a massive shortage. In fact, we have so many backlog orders for AI-related work. We just can't get enough GPUs to fulfill that. And, as I said, the market's so big for not just NVIDIA, but a lot of these companies coming out. Now, Microsoft, if it was buying, let's say, 100 GPUs from NVIDIA last year, they're going to buy more this year and more next year.
Yep.
It's none of that is going to stop. This is just going to help them. It's possible that some of these AI chips can help them to do, maybe less of a workload or less strenuous workloads that they don't need those high-powered NVIDIA chips. So there is no shortage of work right now. We just have a supply problem.
Also, I'm guessing the same chip maker is going to make both NVIDIA and Microsoft's chips. It's all going to be made at TSMC, right?
I guess. All right. Anurag Rana, he is the software king of Chicago, Bloomberg Intelligence. Microsoft can be making more of its own chips. Good for them. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Gerard DePippo, Senior Geoeconomics Analyst with Bloomberg Economics. He's going to join to discuss the meeting between President Biden and Chinese President Xi and what that means going forward. Plus, Lorraine Gilbert. We get her market call here. She's the CEO of WealthWise to discuss her thoughts on these markets and inflation. And then on the commodities front, Dr. Luisa Moreno, president of Defense Metals Corporation, discusses the significance of China banning rare earth exports. That's all coming up in this hour. But first, let's kick it off with John Tucker and a Bloomberg Business Flash.
All right, stocks are higher right now. Soft landing narrative may be gaining traction. The stocks are up with the S&P 500 crossing over 4,500 just by 5 points right now. You have 9 of the 11 major industry groups in the index. They are up. More evidence of a slowing rate of inflation. Producer prices declining by the most since April of 2020. Same time, retail sales slowed down, but were still pretty resilient. The conditions in place for stocks to rally once again, at least according to David Sowerby at Ancora Advisors.
If Jay Powell is the head lifeguard blew the whistle, get back in the pool. You had likelihood of less Fed tightening, pausing. Sentiment, unusually bearish. That's a good contrarian indicator. And out of third quarter earnings and cash flow, that's been very good.
Well, as stocks are higher, they've come off the session highs right now. Part of the problem with this rally today is that you have yields higher. The 2-year up 8 basis points. The 10 is 10 basis points higher yesterday after the huge rally we saw yesterday in the price of bonds. S&P 500, again, up 11 points, 45.06 on the index. The Dow up 125 points. The NASDAQ 100 up 20. And then there's word from Amazon.com introducing a version of its Astro robot that's aimed at businesses trying to find a new life for the product that was kind of slow to take off consumers. This one will be designed to act as a rolling security guard. And hopefully, if you pay a little extra, you can get deadly lasers built into this.
Nice.
That will fire at unruly employees. We
I want there to be lasers
That's
somewhere.
fake, by the way.
You know.
Oh, there's got to be lasers in this thing. You would hope, anyway.
Yeah.
That is your
What's
Bloomberg.
the point otherwise, right?
Did you take the ferry today?
I did, once
was it?
again. Yeah, it was absolutely marvelous. I mean, coming in, it's not a commute. You sit down, I'm relaxing, reading my 1,000-page book, which will take me probably till June to read. And then going home, you sit at the bar, have a glass of wine.
Sure you do.
That's not a commute.
Back to the swamps of Jersey. All right, excellent. That's the way to do it. And what are the rest of us doing on New Jersey Transit? I don't know. John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. Also doing the streaming stuff as well on YouTube, so head over there. And we're also
Important to tune in to the YouTube stream today.
Yes.
Because it's the last day.
Oh, that's right.
That you say goodbye to this beard, Michael.
Okay, another one. Good one. All right, and sorry, we're just all over the media stuff here. We're now in your dashboard as well with Apple CarPlay and Android Auto. It gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. How do you get it? Well, starting off, it is free, so that's good for John Tucker. It's free with the latest version of the Bloomberg Business app. That's the Bloomberg Business app. Get it on your phone in the Apple App Store or on Google Play. Just download the app and connect your phone to your car and get started. And, of course, it is all presented by our sponsor, Interactive Brokers, so we thank them. Good stuff here. Markets higher again yet today, following up on that strong surge yesterday. Let's check on Bailey Lipschultz. He covers the markets.
Oh, I got to ask him a question first. One of the best things about getting old is that the kids no longer get my references. And, well, or any. So Bailey just turned 30.
Yeah.
And the Amazon robot that John Tucker was talking about is called Astro. Do you know why?
No, he's got no clue.
No idea.
Oh,
Have you ever heard of the Jetsons?
Sad.
Oh yeah.
Okay.
Is that
The
is
dog.
robot?
Astro
the
was
dog
the
is
dog.
Astro?
Yeah.
Oh. Man, a little bit before my time.
And the Amazon robot is named after the Astro from Jetsons, apparently.
Apparently.
I did a little digging.
Okay, the dog, but Astro was not a robot. He was a real dog.
Was he not a robot dog?
His boy Elroy,
His boy Elroy.
Jane, his wife,
Yes, we know it all.
daughter Judy.
Bailey, help us out here. What's happening in the markets? What are you looking at?
As you mentioned, a lot of green. Looking at some areas of strength, the Dow Jones Transport Average, ticker TRAN, markedly outperforming right now, up 1.1%. Dow Jones regular industrials up only 1/3 of 1%. You've got Alaska Airlines up 3%, JetBlue higher by 2.9%, JB Hunt up 2.4%. So a bit of that soft landing narrative driving some of those transports higher. As in another area, keeping an eye on big box retailers, Target reporting results, as we mentioned earlier on the show, blowing out expectations. Right now, the stock is up about 17%, biggest jump since August 2019. That paired with some of the U.S. retail data leading the likes of VF Corp parent company Advance to outperform, as well as an upgrade from J.P. Morgan. So we are seeing those two pockets of the market really rallying in a day that when you look at the biggest drivers for the S&P 500, usual suspects in Apple and Tesla, but Target followed by Netflix and Berkshire Hathaway rounding out the top 5 in terms of points added on a day that we're seeing Amazon and NVIDIA as well as Microsoft all trading lower.
But the market, the indexes are trading off their intraday highs here. Yeah. So we're pulling back a little bit. I mean, the earnings, I mean, I don't know. They seem, I'm going to say, we'll talk to Gina Martin Adams and Bloomberg Intelligence, but the earnings were okay. It's just the guidance, I think, from a lot of these companies are a lot more cautious.
Yeah, a lot of uncertainty. I was talking to a banker this morning, and he was basically calling out that in his experience of more than 3 decades, this is the most uncertain time period outside, from a geopolitical standpoint, outside of the aftermath of 9/11, just given the unknowns around Ukraine, as well as obviously the Middle East with Gaza, and he even called out uncertainty around China and Taiwan, looking at some of the positioning coming from this evening's dinner between President Biden and Xi. 2 areas, though, two stocks to also call out, though, that are rallying. We did have 13 Fs, and so those filings came in. Sirius XM, ticker SIRI, right now up 7.1%. That coming after Berkshire Hathaway reported a new stake. 9.7 million share stake, valued at $44 billion as of September 30th, so 11th largest holder according to Bloomberg data. So this is a company, Berkshire, that has held exposure to Liberty Media entities that track SiriusXM.
Wait, valued at $44 million?
Yeah. Million, not billion.
Yeah, because the whole company is only a $20 billion company.
Yeah. But Berkshire does hold the Liberty Media tracking entities, so they track SiriusXM, they track Formula One, Live Nation Entertainment. He actually is now a holder of the Atlanta Braves, about an $8 million stake, so not huge money by any stretch of the imagination, but some of those interesting things that we saw from those 13F filings.
Do you listen to SiriusXM?
I do not. I only use Apple Music.
I will tell you that we have a new channel.
Ooh. Yes.
It's channel 121 now on SiriusXM.
Bloomberg Radio was
119.
Okay, and now we're 121.
Yeah, which I feel is more aesthetically pleasing in some ways, you know. And also, no one's replaced us. As far as I can tell, there is no 119.
Okay.
So it's only 121. Bloomberg Radio, 121.
On SiriusXM. All right, anything else, Bailey?
Well, as you mentioned, talking a lot about Disney with activist investor ValueAct growing its stake. ValueAct also, according to Reuters, having a stake in Expedia. We're seeing Expedia, ticker EXPE, up 7.4%, breaking out to a new 52-week high. So it does seem like ValueAct and a number of these activists getting more active and trying to shake up some of these companies, just given the lack of activity, broadly speaking, that we've seen for the last 2 years.
All right, hopefully they can get something done at Disney for those shareholders. Bailey Lipschultz, thanks so much for joining us. Bailey Lipschultz, he covers all the markets for Bloomberg News. Big goings on out in San Francisco. We've got the Asia Pacific Conference out there. Gerard DePippo joins us. He's a senior geoeconomics analyst with Bloomberg's Economics. He joins us here. So, Gerard, what are the expectations here? What are reasonable expectations for a meeting between President Biden and President Xi of China? What should we be thinking about?
Well, I would say the expectations are modest, but if we're grading on a curve, given the state of bilateral relations, they're on the more positive side than we would have seen over the past 6 months to a year. In terms of specific deliverables, I think the things to watch for would be an agreement on resuming military-to-military talks, which is something the White House has been pushing for a while just because of concerns about deconflicting and there being maybe some accidents. Reportedly, the Chinese are willing to agree to curtail fentanyl precursor exports, which obviously affects the opioid epidemic in the United States, which is something the White House really wants. Last night, they actually already announced agreement in principle on climate change, which would have some bearing on COP28 in Dubai. And they might announce something regarding artificial intelligence and their use in weapon systems. And then finally, I think maybe the most sort of market relevant point would be if China actually agrees to purchase more 737 MAXs from Boeing.
So
yeah, that'd be good for Boeing.
It's a profit deal.
Yes.
No, so basically the most important thing is the resumption of military-to-military talks. For our lives. How is that looking? Because even if relations are better than they were 6 months ago or a year ago, they're still a lot worse than they were 6 years ago.
Yeah, I mean, the mill-to-mill talks have been something the Pentagon has pushed. The obvious reason is that there's a lot of near incursions or near accidents with Chinese fighter planes, for example, flying very close to U.S. or Australian or even Canadian ships or aircraft. The thing is, I would temper your expectation as to what those communications can actually accomplish, because ultimately, if you have some, like, say, the Indo-PACOM commander communicating with the PLA Eastern Theater Command, that doesn't do all that much, except maybe at the tactical level. Ultimately, a lot of those decisions would come up to the either commander-in-chief on our side or on to the chairman of the Central Military Commission, which is Xi Jinping. And so I think it's not going to resolve the actual military tensions, including strategic issues over Taiwan, but it does have some tactical implications.
So what's the feeling in D.C., Gerard? You're based in D.C. You've spent your career there at CIA, the National Intelligence Agency. You're kind of all in this stuff. What's the feeling in D.C. about who might have maybe some leverage in this relationship, the U.S. and China? It just feels like, I don't know, we buy a lot of stuff from them. They buy a lot of stuff from us. Is there any sense of...
Feels like we have less leverage here.
Yeah.
We feel weaker to me.
What's the call, Gerard?
I think that would be debated, depends who you asked. Our view is that actually this looks like the Chinese accepting stability more or less on U.S. terms. And I think what's changed over the past 6 months or so is that the Chinese economy has failed to recover in the way that the Chinese government had hoped. And it's clear that, for example, foreign direct investment in China is down quite a bit or even negative in balance of payments terms. And so I think that compared to what we would have expected, say, 6 months ago, the Chinese are probably at least marginally more willing to play ball than we would have expected otherwise. The narrative in D.C. depends who you ask, particularly if you ask, say, Republicans, they'll say, oh, the Biden administration is looking desperate, they really want a deal. But actually, if you look at what is on the table, the U.S. isn't giving all that much. For example, maybe the most sort of annoying issue for the Chinese would be the export controls that the U.S. has imposed on semiconductors. There's no way the U.S. is going to budge on that, right? So I would say actually the U.S. might have the slight advantage right now.
The problem that I see is the election coming up, right? So our leaders are so dependent on votes, whereas Xi is not. He could withstand a bad economy for another year, and Biden can't.
Well, obviously China doesn't have elections in the way we do, but I think the Chinese leadership does care about general public sentiment. I mean, they do respond to public concerns and do worry about what they consider to be instability. I think the election is more of a sort of central point that we know when that's coming, and I think as we get closer to the election, the Biden administration is going to have less and less wiggle room. Now, I don't actually think in general that foreign policy issues drive electoral outcomes in the U.S., but at the margins, it's certainly going to be used as ammunition against him. And no matter what he does, it seems that some Republicans will accuse him of being too soft on China. So this to me is probably as productive of a relationship as we're going to get, at least until after the election, depending on what the outcome of the election is.
So, Gerard, is this meeting here? It's not, it's kind of a side meeting at an already existing conference there with lots of players. Is there talk or expectation that there might even be a high-level Biden-Xi meeting either in Washington or in Beijing? Is that anywhere in the future, and is that something that Washington would like to see?
So you're right that doing it on the sidelines of another meeting is sort of a notch down from an actual state visit. A year ago, almost exactly a year ago, actually, they met on the sidelines of the G20 in Bali in Indonesia. So this is sort of a repeat of that. I think Janet Yellen has already said that she intends to go back to China. There might be other senior U.S. officials that go, and they might go in both directions. But I haven't seen indication that there would actually be sort of a leader-to-leader direct meeting. I think that would really depend on the outcome of today's summit.
Is there any chance that we get at least some pandas back?
So this is something we've been speculating about. I'll say I have no reporting to back this up, but I will observe that the Chinese expedited the date that they pulled the pandas out of the National Zoo in D.C., which a lot of people are upset about. It seems to me a pretty obvious low-hanging fruit if they want to build goodwill. But we'll see. I mean, I'm still hopeful. It seems kind of odd, actually, for them to have pulled them out quickly as an all for nothing in return. But we'll find out soon enough.
All right, so what else should we be thinking about, Gerard, here? I mean, what does a geoeconomics analyst think about? What are some of the big things you guys are working on?
Well, a lot of it these days is U.S.-China related, but we're also looking at the impacts of the conflict with Israel and Hamas. A lot of it is looking at sort of deglobalization or whatever, decoupling, whatever you want to call it, how supply chains are shifting. And so currently I'm working on a piece looking at the distortionary impact of how China's manufacturing trade surplus is actually probably the largest we've seen since the end of World War II. So look forward to that. But there's a lot of things where we're trying to pull together different strands where there is a sort of geopolitical or an economic nexus.
And because onshoring or friendshoring, that's really a thing. That's happening, right?
It's happening incrementally. I think overall, what the private sector does is going to drive this more than specific policies, at least on the U.S. side. The U.S. policies are geared more towards specific industries like high-capacity batteries. But, supply chains are sticky, and it's pretty clear that what appears to be shifting, for example, production or U.S. imports that are moving away from China in favor of Southeast Asia, those Southeast Asian factories, of course, include Chinese inputs. And in fact, as we published a piece in this recently showing, they actually are receiving a lot of Chinese FDI, and the Chinese firms are actually, an increasing share of what that output is. So sort of first order linkages are probably reducing, but the second and third order, it gets much more complicated.
All right, Gerard. Thanks so much for joining us. We're going to get you back on, my friend. Gerard DePippo, Senior Geoeconomics Analyst. We have a geoeconomics analyst. How about that? He works at Bloomberg Economics, looking at some of the global geopolitics stuff out there, which, for better or worse, is front and center for investors, markets, whether you look at Ukraine, the Middle East. Now China's in focus over the next several days with President Biden and President Xi getting together in the city by the bay, San Francisco. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got it, Paul. TJX top third quarter estimates, but Bloomberg's Katie Greifeld says the guidance was a bit soft.
Looking forward, TJX said it expects comparable store sales growth to be between 3% and 4%, with EPS in a range of $1.07 to $1.10. So that comp stores forecast actually beat estimate, but you take a look at what analysts are looking for. EPS, the estimate there is for $1.12, so a bit soft on that metric.
TJX right now down more than 3.5%. Advance Auto Parts is making its third cut to its fiscal 2023 guidance, and it's a big one. We have more from Bloomberg's Simone Foxman.
Now sees EPS at $1.40 to $1.80, had previously, just as recently as August, seen $4.50 to $5.10 earnings per share. The estimate was $4.64. Third quarter, a little bit more mixed results. Sales beating expectations slightly, but margins really under pressure, some 36% versus an estimated 43%.
Advance Auto also announced a $150 million cost reduction plan and introduced a new CFO, Ryan Grimsland, from Lowe's. Shares right now, they're up about 1.5%. And a change in leadership at Goodyear. The company said its chairman, CEO, and president, Richard Kramer, will retire next year. Goodyear has also announced a new transformation plan, which it says will help cut costs. Goodyear is up about 2%. And a change to Toyota's new 2025 Camry. The company says it will only be available as a hybrid. The car will be manufactured in the U.S. and arrive at dealerships in the spring of 2024. I'm Lisa Mateo.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why would
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Green on the screen. Looks like we're off the best levels of the session after the best day for the S&P 500 yesterday since April. Keeping a lid on some of the gains, you have Treasury yields. They're higher with the benchmark 10-year yield. That is up 10 basis points right now. Investors also digesting another inflation report that showed more evidence of slowing prices. That was the PPI this morning. And along with that, fresh reading on retail sales. Sales are slowing, but you know what? Don't put down the U.S. consumer. They're still pretty resilient. And after 10 days of gains, shares of NVIDIA, remember they set a record close yesterday. Right now, they are down just about 2%. Overall, the S&P 500, 10 points higher. That's up 0.2%. 45.05 in the index. The Dow Jones Industrial Average up 126 points. That's up 0.4%. And the Nasdaq 100 is up 14 points. That's about 0.1% higher. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Matt and Paul.
All right, John, very good. Thank you very much. We appreciate that. Looking at these markets here, another move higher today. Off the highs of the day, but certainly a risk-on day today, following up with just a surging market yesterday on the back of what appears to be some tempered inflation data out there. So let's see what the pros are doing here. We're joined by Laureen Gilbert. She's the CEO and founder of WealthWise Financial Services, and she joins us via Zoom. Laureen, thanks so much for joining us. What are you telling your clients these days? Because we've had a pretty strong move up in these markets really over the last several days, accelerated by yesterday's move.
Yeah, it's been a risk-on market right now, and I think for individuals, they're questioning really why. When it comes to consumer sentiment, it's still been low, and so investors as well don't always understand. But the markets we know are always forward-looking. We do have those good numbers as far as inflation continuing to go down. We think that the Federal Reserve is at their peak, at their rates where they want to be, and so now we're just going to hold for a while. The real area of concern that I see is mortgage applications, the lowest that we've seen since 1995. So we're continuing headwinds when it comes to those high rates on the consumer's purchasing. But if an individual has already purchased their home, it's a different story. So we really have, in a sense, this bifurcation between the people who are doing quite well and having the wealth effect of owning real estate and they've already got their property, and then maybe some of the younger up and coming generations that are coming in who don't have that. And we're seeing that same effect when it comes to consumer debt. A lot more debt for people who are younger, and then those people who have the wealth effect of owning real estate aren't feeling as much with their credit card debt.
I wonder what you think about the possibility of us having a soft landing or a recession, and are there other options?
Yeah. So, we've been talking about a recession. It hasn't happened. So as we've looked at things, what we see is in a sense, it's almost been a rolling recession. In other words, going through different areas of the market, and other different sectors of the market at different times. And so it hasn't hit all the sectors at once. And so we saw that in energy going up and then down. We see that in ad sales. We saw that going up and then going down. And so we've seen it kind of rolling. And so that's our story with that. Maybe we're able to avoid it in that we've seen it in the different sectors, but it hasn't hit everybody at once. So, maybe that is that case for the soft landing happening at different times in different areas.
So what's the message to your clients these days? I mean, how much risk are you suggesting they take on here with this market? Because there's a lot of folks that are still really concerned here that, that wall of worry out there is still there.
Wall of worry is definitely there, especially when you look at, the geopolitical risk that has everybody concerned. But what we're seeing there too, we're starting to calm down, going, okay, it's not escalating into, World War III. It's still staying contained. So that's good news. And I think when it comes to our message is there's still a lot of opportunity in the fixed income markets. And so with that, for people who want to be more conservative, it's really not a problem. Become more conservative. You're holding more fixed income. We've seen over the last few days, we've seen that rally there. We still think that if you look at the overall price of bonds, we still have capital gain opportunities there. So becoming a little bit more conservative, not such a bad idea. Holding more fixed income exposure, because eventually money's going to come back into the fixed income markets. A lot of money is sitting on the sidelines. A lot of money is in money markets. And once things kind of settle down, people are going to want to get back into the bond markets. That's also going to buoy things as well.
Paul, have you checked IN Go lately on the Bloomberg terminal? For a long time, we were looking at year-to-date returns that were red across the board. And now most everything has come back. U.S. Treasuries are almost break even for the year as those prices rise. Yep. Do you not, though, worry, Laureen, about, the $2 trillion deficit that we're looking at, the $33+ trillion debt that we have to service? It's going to cost us almost $1 trillion in interest costs alone next year. Doesn't that wake the bond vigilantes? We've already seen them rear their heads at least once this year.
Of course, that's going to be a longer term concern. It's also the reason why we really need to keep interest rates at a reasonable level in order to pay off debt. So there's a systemic reason for keeping rates in a moderate zone. And I think that we're going to see that. And the good news is inflation, in fact, is coming down. And I think in 2024, we're going to be able to see interest rates coming down. Now it's pricing in June of 2024 in the markets where we're seeing the Federal Reserve will probably start to lower rates. So that's going to, give everybody a sigh of relief as far as interest rates coming down. And that's when I think we're going to see a huge movement of money when money market rates start to go down.
So, Laureen, we just got through a kind of a pretty busy earnings period. We're just hearing from some of the retailers here. What were some of your takeaways from the earnings period? Anything jump out at you that maybe altered your outlook at all?
Well, just today on Target, thinking about Target, looking at, even though their numbers were not so good, and even though they've seen declines, what they're seeing and what they stated about the consumer, I think is what we need to listen to. That consumers are being very cautious. They're being very careful with the money that they're spending. But they were able to come out of that pretty well, anticipating this. So I think that's the message for companies, for sure, to know where you need to be careful, especially with a consumer that will have to slow down. And yes, our U.S. consumers are very resilient, but we're coming into the holiday season. And what we're seeing is that people over 45 it looks like are going to spend more money, and people under 45 looks like they're going to spend less money than they did last year. That goes right in line with those debt numbers that I was talking about. That credit card debt is really hurting people at the lower end and who are younger, and it's not hurting as much for those people that are older that have more assets in different kinds of assets. So I think it will be an interesting retail season, and that the retailers need to be smart about what they're doing in order to get sales up.
All right, so that tracks at my household. Yes. Obviously, over 45 and having a second baby. I'll be spending more next year, no doubt.
Yes, but without a beard.
When's the due date, by the way? May I ask?
Due date is Monday, November 20th.
Wow.
So, yeah, I'll be out of your hair for a little while. Thank you very much for that. So the consumer, you can't count the consumer out, but there's basically a bifurcated market is what I'm hearing. We can't look at the U.S. consumer as a monolith.
Exactly. And so, so with that, then, as far as just looking ahead, some areas that we do like, we do like the small cap space. And we saw that rally going on there, and which didn't happen earlier in the year. But we still think there's opportunities there, being careful in that space, not for companies that are in fact profitable. So I don't think it's an index market there, but I think looking at companies in the small cap space makes sense for some additional alpha.
All right, Laureen, thank you so much. We appreciate that. Good stuff as always. CEO and founder of WealthWise Financial Services. All right, man, you got a lot of change coming up in your life. New baby coming up soon, big, but maybe even bigger, John Tucker, is we're going to be shaving this beard.
I think I'm going to do it in two stages.
I would say that the baby coming is a little bigger.
All right.
But first, the beard, right? And
you're
it's shaving
be a
because
you don't
my
want
existing
you don't
child.
Want to scare the infant.
Yeah, well, my wife thinks it'll be better skin to skin. If I don't have a beard, better for baby kisses. So just the first few days, and then I plan to grow the beard with the child, so that by the time she's 18, I'll have some real Rumpelstiltskin action going on here.
That's your plan, huh?
All right, good stuff. Well, pay attention. So tomorrow, are we going to be sans beard?
Tomorrow, I'm going to go halfway down, I think. Okay. And then Friday, all the way off. The problem is, I think I look much worse without a beard, but we'll see.
It's debatable. I mean, you can go either way on that one. S&P 500 up 0.25% right now. Let's head down to Washington, D.C. We'll get world and national news, and we will do that with Nancy Lyons.
And I do not have a beard.
You should try it out.
Yeah, President Biden and Chinese President Xi Jinping are meeting today in San Francisco, their first face-to-face in a year. Bloomberg's Anne-Marie Hordern is covering their summit.
Well, this White House wants to get this relationship back on track. Obviously, Xi Jinping and President Biden are walking into this meeting after a year of true acrimony between these two individuals. At this moment, one of the highest priorities for the White House is just to get basic military-to-military communications back to a normal cadence.
Bloomberg's Anne-Marie Hordern says President Xi will also be having dinner with some top U.S. CEOs in hopes of enticing more U.S. companies to invest in China that's been suffering economically. Senate Majority Leader Chuck Schumer says he wants to work quickly to pass a stopgap bill to avert a government shutdown.
Today, my Democratic colleagues and I will work with Republicans. I will work with Leader McConnell to see if we can come to an agreement to accelerate this bill's passage. If both sides cooperate, there's no reason we can't finish this bill even as soon as today.
Lawmakers in the House overcame partisan animosity yesterday to pass a temporary government funding bill that greatly lowers the risk of a shutdown, even if it does delay fights over Ukraine aid, border policies, and deep cuts to federal programs. The wife of New Jersey Governor Phil Murphy is officially running for Bob Menendez's U.S. Senate seat. Menendez, a Democrat, is facing federal bribery charges but has refused to step down. First Lady Tammy Murphy, also a Democrat, released a video this morning announcing she will be running for the seat.
I'm Tammy Murphy, and I'm ready to work every single day in the United States Senate for you, your family, and our country.
Murphy has never run for public office. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Connection lost.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. After yesterday's rally, major stock averages, they continue the march higher. Now, unlike yesterday, today you have the Treasury yields. They are rising, so that is keeping a lid on the risk assets. The economic reports today include the Producer Price Index that showed more evidence of a slowing rate of inflation in the U.S. And then you had retail sales slowed, but still resilient. And this all supports the narrative of maybe a soft landing for the U.S. economy. Meantime, Sarah Hunt at Alpine Woods says, you know what, the Fed can't declare victory over inflation just yet.
It's still too early to tell. We still have a lot of data to come through. And even looking at yesterday's data, a large number of components are still showing quite a lot of volatility. So, you know, things such as shelter in terms of rental, that remains pretty sticky and elevated.
Right now, the S&P 500, 14 points higher. That's up 0.3%. 4509 in the index. The Dow Jones Industrial Average up 150 points. The NASDAQ 100 up 27 points. That's a rise of 0.2%. You know, Paul, GM's UAW agreement looks kind of iffy at this point. You have the tentative labor agreement between the car maker and the union. But employees at the plant, the truck plant in Indiana, they've rejected the agreement by a pretty wide margin there. And then the facility in Texas, the workers there, they did approve it. So this sets up a tight vote. This is actually the final day to ratify the deal. So we're keeping an eye on that. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that as always. Matt Miller and Paul Sweeney, we are live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube. So you just go over there and search Bloomberg Radio and you'll find us. You know, one of the gating issues as we make this transition to electric vehicles is the sourcing and supply of rare earth minerals. That's an issue that most of us didn't even really know was a thing, but it is a thing. And our next guest is clearly involved in that and deeply involved in that. Dr. Luisa Moreno. She is the president of Defense Metals Corporation. Luisa, thanks so much for joining us here. Can you just kind of start us off, just kind of telling us what Defense Metals Corporation is? What do you guys do?
Hi, thank you for having me. Sure. So Defense Metals is a junior mining company. We have a rare earth deposit in British Columbia in Canada. And effectively what we're trying to do, or what we're doing effectively, is to bring that deposit into production so that we can increase the rare earth production and refining outside China.
That's a big issue because I guess we're learning this, and we have President Biden, President Xi meeting today in San Francisco. So presumably that will be one of the items on the agenda, is just kind of the sourcing and supply of some of these rare earth metals. Give us a sense of how concentrated or how much does China have of these rare earth minerals, and what kind of a risk do you think that is for the global economy?
So China has quite significant resources. So when you look at rare earths, there are about 17 of them in the periodic table. And so China, and sometimes they're divided into heavies and lights, and China has quite significant resources of that. They produce 60% and refine 85%. So when you look at mine production, the US actually produces about 16%, but exports that production into China as well, where it is refined. So China controls the supply chain. They are the largest producers, the largest consumers as well. And then they export the finished products that we use in the West.
So is it just simply that's where the metals are, or is it because the West hasn't bothered to really make the investment to mine what we have in the West? How's that shake up?
It's both, if I can say. So China definitely have those resources. They have good grades of these resources, and they have also the technology to process it. So in the last 30, 40 years, China became the dominant player. Before it was US, it was in Brazil, it was India. but China was really focused on those strategic materials. They produced refined rare earth when the rest of the world was not as interested. And so they have the technology, they know how to do it cheaply, granted with significant government support as well, which makes competing with them quite difficult.
So tell us about your mine in Canada. What rare earths does it target, and kind of where are you in the development?
Right, so that's a very good question. So as I said earlier, in the periodic table, they are grouped about 17. And usually when you find one, you find all of them together. Okay. And you cannot say, I'm going to mine one and not mine the other one. When you mine them all together. But different deposits have different dominant rare earths. And so the ones that we have are the neodymium and praseodymium in value are the most dominant. And those are the ones that I use to make the very strong magnets. The strongest actually known to man. So, and those magnets are very important for applications such as MRI machines, for medicine, as well as green technology applications. They go into electric vehicles, in electric motors, and they also go into wind turbines and things like that. And of course, the name of our company, Defense Metals, it has significant defense applications.
So where are you in kind of getting, is this mine up and running? If not, kind of what's the timetable?
Right, so it's a deposit and we are developing. So we are hoping to be in production in 5 years. So usually in the West, we are very careful and how we develop these mines. There's a lot of permitting requirements that we have to follow. So we are very happy that we will be able to establish a significant resource, but now we have to do everything else. Do all the environmental studies that are required and preparations for the mine to produce and process it.
So how are you funding this early stage here? It's pre-revenue, so how are you funding this business? It sounds like starting up a mine is kind of expensive and capital intensive.
Extremely, extremely. So the model that we have, usually here in the West, Canada and Australia being really the dominant markets, is through the capital markets. So we are a non-revenue company, and there are thousands of investors around the world that invest in mining. There are some institutional investors as well, hedge funds, pension funds, and others. But those usually enter at much later stages. So the retail investors are the ones that actually support junior mining companies like ourselves. And they make a bet that we're going to make it someday. So that's the way we usually raise money. Right now, if you look at commodity markets across the board, it's pretty depressed. Many of the stocks are down, and it's not really an environment that we want to raise money because it's dilutive. But fortunately, our company is well cashed and we can wait. But it's a cycle. Commodities go into cycles. And that's what we do. We wait for those cycles and raise money. And again, it's a disadvantage for us against companies in China, for instance, that get direct support from the government.
So there is no government support typically for the Western companies?
In later stages, so the IRA program that is out there, it's focused to support part of that, but not to junior mining companies like ourselves. They want to see a well-established pre-feasibility study and support later stages of a bankable feasibility study. That's most programs, government programs. So junior mining companies, many of them that are at preliminary economic assessment level of drilling and establishing a resource, are for the most part alone, with the market, of course, with no government support.
Interesting. All right. Very interesting discussion there. Dr. Luisa Moreno, she is the president of Defense Metals Corporation, talking about rare earths, minerals, and how critical they are for a whole host of industries, and how the concentration in China continues to be problematic for a lot of folks. And so looking to develop some sources and supply chains outside of China. Looking at the markets here, we are up about 0.3% on the S&P 500, so off the highs of the day, but still green. The NASDAQ's up about 0.25%. The Russell up about 0.9%. It really had that big day yesterday. The Russell was up over over 4%. So we keep an eye on some of the small cap stocks having a little bit of a pickup here as the market tries to expand its breadth of performance. We're going to have more coming up. This is Bloomberg. Let's go to Lisa Mateo right now for some company news.
Hey there, Paul. Microsoft is stepping up the competition in the AI scene. The company has unveiled its first homegrown artificial intelligence chip and cloud computing processor. Microsoft also announced new software that lets clients design their own AI assistants. Shares right now, they're down just a fraction. If you were thinking about joining ChatGPT Plus, you may be out of luck.
The paid ChatGPT Plus service is in such demand that OpenAI says it can't keep up, so it's hitting the pause button on accepting new users, saying it needs to catch up to ensure a great experience for everyone. The AI startup says about 100 million people use its services every week.
That was Bloomberg's Steve Potisk reporting. Sources tell Bloomberg SpaceX is discussing an IPO for its fast-growing Starlink satellite business as soon as late 2024. Bloomberg's Ed Ludlow talked about it earlier.
What SpaceX is doing is moving Starlink and Starlink's assets into a subsidiary, incorporating it as its own private entity, a wholly owned subsidiary of SpaceX, kind of a stepping stone towards that. But immediately following publication of our reporting and our story, Elon Musk tweeted or posted on X, the platform formerly known as Twitter, false.
To healthcare now, where Fitch Ratings has lowered New York City's Mount Sinai Hospital's credit rating one notch to A-. And Fitch says it expects operating losses to widen, and that weak performance has been driven by rising labor and supply costs and also inadequate reimbursement to cover inflationary pressures. Those are the company stories we're following this hour. We'll have more Bloomberg Markets coming up in just a bit. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller, Paul Sweeney, live here in a Bloomberg Interactive Brokers studio. S&P 500 up 0.25%. Darkening the door to our studio is one Max Abelson of Bloomberg News. Max, you've got your TV show Thursday at 10:30.
That's it.
p.m. And talk to us about what you guys are doing this week.
You know what? I think that last week when I chatted with you, I said that was the best episode we've done.
Oh no, here we go.
Cornell West. This one was the hardest episode we've done, and I think the most memorable. We interviewed a writer and an activist who's a really interesting person named Alice Wong. She's probably, I would say realistically, she might be the most prominent disability activist in the country.
Disability activist, okay.
Yep. She can't, she needs help with, she's in a wheelchair. She needs help with breathing. Her muscles have weakened and she no longer talks. So she uses a text to voice technology. And look, I mean, probably like most journalists in America, I don't have that much experience interviewing people who need help talking. And it was a really unusual experience, and it was also a really memorable experience. I really loved it. She has so much to say. The episode theme is reputation. And we spoke about how, if you're disabled in America, the reputation you have is often out of your hands. People come to disability with a whole lot of ideas. And I would really, I think both of you would really enjoy it. She has a lot to say, and she says it really
So
well.
what's kind of her main point about, kind of setting the narrative of her reputation as opposed to somebody coming and seeing maybe a disabled person and kind of setting that narrative?
Yep. A lot of the way that we talk about disability, and full disclosure, I should say my brother, disability is something my family knows about personally. When we talk about disability, we often talk about it through the prism of like sadness and struggle and unpleasantness. And a lot of people are uncomfortable about disability, especially, when it has to do not just intellectual disability, but physical disability. We often talk about disability from the prism of the things you lack, She talks about it in a completely different way. She has there's something very radical, very, very, very radical about her. She talks about disability as something it's not cute or inspiring. The way she talks about it is that it's like kind of powerful and kind of magical. And I'd also recommend reading her book called Year of the Tiger, one of the best memoirs I've read in the last few years. It is a good book.
Is it important to make the distinction between disabilities that you can see in a person and those that you can't, like whether it be mental disability or some sort of cognitive disabilities like that? I mean, she's in a wheelchair, obviously.
That's a great question. The difference between intellectual and physical disability is a profound one, but I think that maybe this is going to be a broad statement, and I'm not sure if I'm the best person to answer it. But I think the way that Americans sometimes treat those two is with the same. That we look at differences with fear and distaste and discomfort. And I think that listen, I'll just speak honestly about myself. When I was sitting down for this Business Week show interview with Alice, and I knew that in some ways I was a little scared that I wasn't going to say the right thing or that I wasn't going to be able to interview her well. And I think that it was kind of powerful for me to come to it from a place of like, I didn't know how it was going to go. And I was asking questions, and I genuinely didn't know what the answers were going to be. But one thing that I loved about interviewing Alice is she comes from a place of honesty. She has a really distinct voice. She knows what she wants to say, and she really says it. She doesn't pull punches. And I think talking about discomfort is an uncomfortable thing to do, and she really does it.
All right, so that's the Business Week show.
That's a Business Week show. And shout out to Rich Paul, by the way, LeBron James' agent. He's on the show, too.
Oh, cool. So, all right, got a lot of stuff there. So that's at 10:30 p.m. Wall Street time, Thursday night.
Which is tomorrow night.
Boom. There you go. All right, very good. Max Abelson, Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. Markets here still higher on the day, up about 0.2%. Sound On with Joe Matthew from Washington, D.C. That starts right now.
from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
And so begins the countdown to the next shutdown. Welcome to the fastest show in politics as the Senate now prepares to take up a stopgap bill passed by the House to keep the government from shutting down this week. But it seems we've only postponed the inevitable. And we're going to have the latest for you from Capitol Hill coming up with Jonathan Tamari from Bloomberg Government on the job left to be done when it comes to funding the government and helping our allies in Israel and Ukraine. To that end, a conversation coming up with former Ambassador James Jeffrey, an analysis from our signature panel as President Biden today meets with Xi Jinping in San Francisco, and a new poll showing a big shakeup in the Republican race for president in New Hampshire. That's all ahead this hour. After we get you up to date on the markets, for that, we go to New York, get an update on trading from John Tucker. Hi, John.
Hey, Joe, we are higher, but nothing like yesterday. S&P 500 is topping 4,500. Today's stock advance, not what you saw again with yesterday's rally. Unlike yesterday, you have Treasury yields. They are higher. Target soaring on solid earnings report today, while NVIDIA dropping after that 10-day winning streak run and yesterday's record close. No shortage of data either, Joe. Retail sales slowing in October. Prior months, they were revised higher. That suggests some resiliency going into the holiday season. Prices paid to U.S. producers, they declined by the most since April of 2020. Julian Emanuel at Evercore ISI says, you know what, the Fed is on track to achieving its goal of a lower rate of inflation.
The fact is whether it's turkey prices or gasoline prices or diamond prices, whatever, the trend of lower inflation, I don't want to say disinflation, but the trend of lower inflation is very much intact.
Right now, the S&P 500, 8 points higher. That's up 0.2%. 4503 on the index. The Dow Jones Industrial Average, 112 points higher. And the NASDAQ 100, that has just turned lower, down 2 points. The two-year yield, 8 basis points higher. That's at 492. And coffee futures, sorry to say, jumping to the highest since June. Stockpiles of beans have declined to the lowest since 1999. That's news you can use, Joe. We check the markets every 15 minutes right here on Bloomberg Radio. I'm John Tucker. Joe, back to you.
Like the way you think, John. Let me put my coffee down so we can talk here. Welcome to the Wednesday edition of Sound On. I know it feels maybe like it should be Friday by now. We've packed a lot into this week. They actually passed a bill. It really happened in the House of Representatives late yesterday, a stopgap measure to keep the government from shutting down this week.
On this vote, the yeas are 336, the nays are 95. 2/3 being in the affirmative, the rules are suspended. The bill is passed, and without objection, the motion to reconsider is laid on the table.
Yes, dare to dream. This will keep the government running, by the way, for, well, weeks into next year. This is the laddered CR we talked about. And by the way, I'm assuming this gets passed by the Senate. That does appear to be the case. Senator Chuck Schumer, just a short time ago, filing cloture on the Senate floor.
I move to proceed to Calendar 248, H.R. 6363.
Clerk will report. Motion to proceed to H.R. 6363, an act making further continuing appropriations for fiscal year 2024 and for other purposes.
I send a cloture motion to the desk.
So I guess this is really going to happen. The Senate signing off on what the House did. Remember, they had their own CR in the Senate. Didn't look exactly like the one in the House. But there's something called reality here in the calendar. And this is the one way to get it done in time for Friday. We talked about this late yesterday on Bloomberg TV with Senator Mark Warner, the Democrat from Virginia. Not a fan of the process, not a fan of the ladder. Remember the ladder? You get 4 bills expiring in January and then the other 8 in February. But he says, you know, the grown-ups need to do something here.
The process being crummy, does that mean I'm going to, vote to shut down the government over it? No, I think I got to, we got to be adults. And unlike some of the crowd in the House. And if it comes over, and as long as it's clean and there's not any other, add-ons, poison pills, funny business, I think that the overwhelming majority of us will support this.
Funny business. We'll see about that in a conversation right now with Jonathan Tamari from Bloomberg Government Congress reporter. This is interesting, Jonathan. Welcome back. It sounds to me like the lawmakers all left town and left you up there alone. Is the Senate going to move on this today?
Yeah, I mean, you mentioned that it feels like Friday, and it certainly does feel like Friday in Congress because everybody is getting out of town and trying to wrap things up. The Senate is looking likely like they're going to try to move this today and basically wrap up their work, fund the government, and send everybody home until after Thanksgiving.
How quickly can they get this done? There's talk about a vote today, Jonathan. Is that real?
There's definitely an effort underway to get that. The senators on both parties sound pretty optimistic that they'll get there. As you know, with the Senate, everything by design moves very slowly unless you get unanimous consent, in which case things can suddenly move very fast. So my impression is that they're working on getting that consent right now. Typically, senators don't like to, stall each other's holiday plans. So odds are history says they'll get there eventually and get this vote, and everybody can get home and out of Washington later today. If not tomorrow, but it looks likely like today they'll get it done.
You mentioned the holidays. It does seem that this was just an effort to save the holidays, save Thanksgiving, Christmas, and Hanukkah for the lawmakers, because everyone's talking about a shutdown again in January. We simply prolong the inevitable here, right?
We do prolong the inevitable, but I think it lowers the political stakes a little bit by moving it. As you point out, there's a holiday coming up next week. Everybody's going to be traveling. Nobody wants to deal with a shutdown in the middle of all of that. And no matter who is blamed for a shutdown, I think everybody would end up absorbing some negative impressions from that. Joe Biden, Republicans in the House, Democrats in the Senate, could disrupt the economy at a time when people are supposedly going out shopping for the holiday season. Just nobody wanted to deal with that. And just on a human level, I don't think lawmakers want their holidays basically held hostage by this. So they push it to January and February. They're still going to have the same confrontation, but it'll at least be without this holiday pressure that kind of often leads people, I think, to accept some deals that they might not under other circumstances.
Jonathan Tamari with us from Bloomberg Government. Is there a foregone thought then, or am I projecting here that the government is likely to shut down? Stakes may be lower here, but we're nowhere near agreement. Jonathan, a little while ago, they couldn't even get a procedural vote on a spending bill on the floor of the House once again. Do we have any reason to believe that we will avoid a shutdown next year?
Well, there's going to be, as you point out, there's still a lot of work to be done. They have to eventually, they keep passing these short-term bills. Eventually, they've got to pass a long-term spending bill. And both chambers are struggling to get that done. In the House, you've got Republicans fighting Republicans over what those spending bills should look like from the center and from the far right. In the Senate, everything's got to be bipartisan. And so far, it's been a bipartisan process, but a very slow-moving process. So we'll see them both, I think, after Thanksgiving, try to advance those spending bills and to tee up those January negotiations. Each side will kind of lay down a marker in December, they hope, and then negotiate in January. But if they can't pass anything, they don't have anything to negotiate over. Right. We'll see if the politics change at that point in time. There's a lot of conservatives very angry with the new speaker over this short-term spending bill, and we'll see if that means that he drives a harder bargain next time around.
I want to ask you lastly, Jonathan, about the work left to be done here, and it includes funding for Israel and Ukraine. I know the House passed a standalone Israel funding bill, but that apparently is not going to be taken up in the Senate. And the president's supplemental request, including both plus Taiwan and border security, appears to be on ice. Are we going to be talking about this next year when Ukraine tells us that it's out of money?
There's a hope among senators, at least, that they'll be able to put all these things together by the end of the year. Border security, Israel, Ukraine. There's bipartisan support for Israel. Ukraine, there's some skepticism from Republicans. Border security, there's some skepticism from Democrats. But the idea is that there's a critical mass, that if you put them all together, you can get a critical mass in both chambers to support it. it's one where it feels like there's a pathway to get it done, and they just need to find out kind of the right balance of all the pieces. So that's something they hope to get done later this year. They have to pass a defense authorization bill. It could possibly be attached to that. But that, I think, will be one of the big things to watch when they're back from Thanksgiving.
True enough. Jonathan, thank you so much for the update. Good luck getting everybody out of here on time. Jonathan Damari at Bloomberg Government. To his point, House members are already bailing. There's a line to get to the airport. I bet that exit off 395 looking pretty ugly right now. Can we get over the bridge? The Senate will be next. We'll see if they get this done today. But even if they do, Israel and Ukraine are still left up in the air, and that's where we begin our conversation with the ambassador. He's chair of the Middle East program at the Wilson Center. James Jeffrey, former ambassador to Iraq and Turkey. It's great to have you back with us, sir, and I appreciate your joining us here in the throes of debate in Washington. How important is it going to be to start with this matter of funding for the Senate to move on Israel and Ukraine before the end of this year so this does not slip away?
It's very, very critical for both countries, and they're both part of the same fight. Two democratic states being attacked by the enemies of, if you will, the global order. So I see them as the same package. Many in the Senate see that. There are some in the House, both on the left and the right, that are doing nitpicking about this. But I'm very confident this is going to work. We should be all encouraged by what the House of Representatives has done this week. A little bit of a return to sanity. I think this is going to carry over into these other things as well. I'm pretty upbeat.
You're upbeat just to see something move. And so this is a story of momentum. Is that what you mean?
Exactly. And recognition that you have to do deals, and that if you're seen as the one who's blocking the deal, it's going to hurt you on Election Day. And I think some of the Republicans felt that that may be the one explanation for why they didn't do as well as they had thought in the November elections.
We have a fascinating story on the Bloomberg terminal today from our Pentagon reporter, Tony Capaccio, who's going to join us a little bit later, Ambassador, about the Pentagon not waiting for a funding measure to pass. In fact, it appears the Pentagon has quite a bit to work with here when it comes specifically to Israel, ramping up aid, delivering on requests that include more laser-guided missiles for Apache gunships, as well as 155-millimeter shells, night vision devices, bunker buster munitions, new Army vehicles, the new Humvees, even some drones, the Switchblade drones that we apparently don't even have. Is this just coming out of our inventories? In another case, Ukraine is returning weapons that were donated to Israel. It sounds like they're getting a lot already. Is it what Israel needs?
It is what Israel needs, particularly the bunker busters and the drones. Some of it's coming out of inventories. Some of it is stuff that we have in the pipeline that will be replaced. This is risk, but it is low risk at this time. The point is we are defending, and Americans need to know this, we are defending these United States, we're defending Taiwan, we're defending the whole global order by helping the Israelis and the Ukrainians fight this fight. This is money well spent. We'll find the weapons. We'll find the ways to fund it. If necessary with Ukraine, we can get the Europeans to buy our stuff and give it to them. We're going to continue doing this. I'm absolutely convinced.
Spending time with former Ambassador James Jeffrey here on Bloomberg Sound On. You might have seen this letter, Ambassador. I wonder your thoughts about this. More than 30 relief organizations sent a letter to the Secretary of Defense, Lloyd Austin, urging him not to send one of the items that I just mentioned. And it's not the high-tech drones or the laser-guided missiles. It's the 155-millimeter shells. It's the rounds that are indiscriminate and might result in more civilian loss of life. How do you respond to that?
In the hands of the Israelis, who know how to call in artillery, it's not indiscriminate. It has a circular error probability of the more modern ones of just a handful of meters. Now, the blast radius can be over, 50 meters. That's true. You get shrapnel flying around. But this isn't going to inadvertently kill hundreds of people. And the Israelis need it. And those aid agencies obviously are doing heroic work under very difficult circumstances in Gaza, but they cannot have a veto over a military operation that is critical for our ally Israel and frankly critical for us.
It appears that the IDF, Israeli military, is moving into the hospital that we've been hearing so much about in Gaza. It's been suggested by some that there might, in fact, be Hamas militants below the hospital. How dangerous is this going to get as Israel is urged to slow this down by the White House, to show restraint, to look out for civilians, when you've got potentially militants working underneath a hospital, Ambassador?
Everything is dangerous in Gaza for both Israeli troops, civilians, and fortunately for Hamas, who's taking heavy losses. The Israelis know what they are doing. They will simultaneously clean out the hospital and start moving underneath it while delivering, as we've already seen, incubators, water, other medical supplies to the hospital itself. They're not going to shoot, innocent people in the hospital. They haven't done that deliberately at any point in this campaign.
I have to ask you about what's happening in Ukraine, as we obviously are walking into winter here soon. As this debate floats in Washington about funding Ukraine, and you hear more Republican voices, specifically in the House, say not another dollar, does that embolden Vladimir Putin to do something stupid, to do something, for instance, around the holidays, maybe to target civilians, maybe to start sending missiles into Kyiv again, to try to wear down Americans' view of Ukraine's potential to win?
No, for two reasons. First of all, he knows that if he starts doing that, he's going to create more resistance, including among Republicans in the U.S. House. Secondly, Vladimir Putin's doing about everything he can short of nuclear weapons, and he's not going to use those in this fight. For him, it's all out. Nonetheless, he will be encouraged psychologically by this action if we don't get the weapons and the funding, and he'll be encouraged by the presidential campaign.
Mm-hmm. Ambassador, I know you stopped a very busy day for us, and I want to thank you for coming back to see us once again. James Jeffrey with us live on Bloomberg Radio, now chair of the Middle East program at the Wilson Center. Of course, he's spent a career doing this, not only in his work as an ambassador, his work through the State Department. He was also the special presidential envoy for the global coalition to defeat ISIS. So he brings a unique experience, and it's one that will turn to the panel coming up. Rick Davis and Jeannie Shanzano are with us. Our signature panel on the fastest show in politics. We're going to get to what's happening here in Washington, overseas, and in San Francisco, where President Biden today meeting with Xi Jinping. It's all ahead, only on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After yesterday's stock rally, the major averages, they have right now turned mixed. And weighing on the stock advances today are the Treasury yields. They are higher. You have the benchmark 10-year yield. That's up right now almost 10 basis points. We're at 4.54. Biggest drag in the S&P 500, that's coming from information technology, which, of course, is rate sensitive. After 10 days of advances, you have NVIDIA, one of the biggest individual laggards. Those shares are almost 2.5% lower. Amazon, Microsoft also contributing to their declines. Overall, the S&P 500, 6 points higher. That's up 0.1%. Right at 4,500 for the index. The Dow Jones Industrial Average is up 130 points. The NASDAQ 100 is 18 points lower right now. That is down 0.1%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
So a little victory lap for the House and the new Speaker getting a continuing resolution passed. After all, last guy got fired for that, so I guess we'll call that a win for Mike Johnson. The question is, now what? It looks like the Senate will sign what was passed yesterday in the House, or pass it, I should say, and the President will sign it. That'll bring us deep into January, which doesn't seem that long off. Let's assemble our panel for their take on what happens next. Rick Davis and Jeannie Shanzano are here, Bloomberg Politics contributors. Rick, the conventional wisdom today is that we simply prolong a shutdown. Everybody gets to have a nice holiday and then come back to face reality. Is that real?
Yeah, you'll notice they all got out without any action on any of these appropriation bills that they're got stacked up in the House. So sure, yeah, we hope that they can make some progress. But remember, too, they've got a big Christmas holiday coming up pretty soon, and they don't come back until, sometimes the second week of January. So when they actually are going to get this work done on these appropriations bills to make this first deadline, the Speaker's going to have to do some creative scheduling.
That's true. And I don't know what role Democrats will be able to play there in the House, Jeannie. I guess the Senate has some work to do as well. You can talk to us about whether we shut down first or fund Israel and Ukraine first. What's more likely?
Well, I just want to celebrate the fact that we elbowed our way past a shutdown, Joe Matthew. And I worked on that one all night for you.
You are not referring to violence in the House, are you?
Never. And I wanted you and Rick to raise it, and I'm sorry I had to go there. But putting that aside, the reality is that we have about, 21 legislative days until we come back and do this all over again. And to your earlier point, we now have, celebrations for the fact that the new speaker passed the same thing that the old speaker passed and got fired for. And what we're hearing, and you mentioned this earlier, you're hearing from Republicans on the conservative side, over 90 of them who voted against this CR, saying that they are very frustrated with what happened yesterday. So while it is a win for the American public and we are open once again, the reality is it is not a win for Mike Johnson, because he really doesn't have any room to maneuver. And he himself yesterday promised no more CRs. And we don't even have a top line agreement between the Senate and the House appropriators for how they're going to fund the government. So I'm not convinced that this is much to celebrate about. If I had to guess, I say we get Israeli funding first before we get any of this. But, we need that now. We shouldn't even be waiting for that. So this is still a big hot mess, hence all the tension on Capitol Hill yesterday.
Can the Senate break through with something here, Rick? Ambassador Jeffrey seems to think so, and he's not the first person who's said that on this program. You come back around with a new version of this emergency supplemental request and try to write it in a way where the House can pass it. What do you think?
Yeah, there's no question that the Senate version is going to be more omnibus, right? It's going to include, like what the president did, Ukraine, attached to Israel, attached to border, and attached to some additional funding for Taiwan. I mean, since the president is meeting with Xi this week, it's worth noting that there was Taiwan funding in there, and people have sort of whistled past the graveyard on that one. So there actually will be some momentum coming back to the House way. The question is the House going to be functional enough to actually pass anything? I mean, it's one of the rare occurrences that Jeannie and I totally see eye to eye. The reality is that maybe Speaker Johnson has just done the one thing he could do, which is patch up a CR, but there's no indication that he's got a ruling coalition that can actually pass all these appropriations bills. He tried to get one done a week ago and couldn't even get it a floor vote. Mm-hmm. So it's a little befuddling as to how they're actually going to get this done.
Well, we should remind everybody as well, Jeannie, the Speaker, Mike Johnson, may have done something here sort of defying gravity in a way that Kevin McCarthy could not. But he says he will not pass another CR. So January 19th is when the shutdown would begin. And what are we going to have? I believe it's 21 legislative days in the House that will be worked between now and that date. Is there any path?
You know, hopefully there is a path. I'm not even convinced this was something Mike Johnson did, or if it was a result of pure exhaustion on the part of these legislators, and the fact that they gave him an extended honeymoon. But the reality is he comes back and not anything has changed. I mean, again, you have over 90 Republicans voting against this, coming out afterwards and saying they are deeply disappointed in what has occurred. There were no spending cuts. This was a clean CR. It's what I wanted, but it's certainly not what the right flank of his party wanted. And so, you know, how do you move forward from that? It is a challenge. And what he's going to have to do after that, I think, really ridiculous promise yesterday, either he goes against what he said yesterday and he pushes for a CR, or, you know, he is going to have a revolt on his right flank. You know, the options he has, because he wasted so much political capital on what's happened over the last week. I'm not sure how he recovers from this. And I'm not convinced that they won't go to oust him in the same way they did Kevin McCarthy. So nothing has changed. You know, we are facing the same incalcitrant far right that we always have for the last year. And I am glad Rick and I can agree on something. See, we don't fight as much as the Congress people.
Yeah, well, that's the best part of this panel. That's why we can do this every day for an hour. But I'll tell you, you did make a reference to what happened yesterday in not only the House, but also the Senate. And I have to ask you both, I mean, this hasn't even been 24 hours since we were hearing about fights, physical fights breaking out. The former speaker giving Tim Burchett a shot to the kidney. He said, we've got Senator Markwayne Mullin ready to throw down with the president of the Teamsters inside this Senate health hearing, the health hearing yesterday. If you're just waking up to this story, this is the senator from Oklahoma. He's on the dais there in the hearing room. You've got Sean O'Brien of the Teamsters testifying before the committee. And I guess he's been writing a lot of things on Twitter about the senator who's just about had it here. This is what it sounded like.
Could you guys go bare knuckle if you wanted to? Just a
well, we looked into the rules.
This is actually stand by. This is what went through your mind when you're watching this. He went through a couple. I'm going to spare you.
You want to do it now?
I'd love to do it right now.
Well, stand your butt up then.
You stand your butt up.
Oh, hold on.
Big
Oh,
guy.
All right, so Bernie Sanders brought this whole thing to a close. Markwayne Mullin did a bunch of TV shows last night, and he was asked directly if actually the rules would allow for this type of thing. He was on Newsmax earlier, and here's what he said.
Could you guys go bare knuckle if you wanted to? Just a
well, we looked into the rules, and you know, you used to be able to cane. You got to remember President Andrew Jackson challenged 9 guys to a duel and won 9 times. In a White House dinner one time, a guy was mouthing him at the end of the table. Jackson jumped up, literally ran across the table, and knocked the guy out. And so at the end of the day, there is precedence for it if that's what someone wants to do.
There's precedent for it. Doesn't break the rules. Rick, I'm deeply curious. Does this appeal to a certain side of you, or have we really jumped the shark here?
Look, if we're going to turn to this kind of activity, let's get out the steel cage. Let's get a deal with pay-per-view, and let's make some money off of these guys wrestling. I mean, you didn't even talk about the one I liked the most, which was Congressman Comer calling Moskowitz a Smurf. I mean,
yes, that was
Smurf
fun.
hasn't been called in ages in the floor of the House of Representatives.
Not even sure what that meant. Jeannie, is this a pretty good look? I mean, they actually checked the rules, so he clearly showed up for a fight.
Yeah, and I'm glad, Joe, I'm not the only one. I couldn't understand the whole Smurf comment. Rick will have to tell me off the air. I was so confused by that one. Yeah, this was, watching Bernie Sanders try to do this and then watching the wonderful reporter from NPR while Burchett is being, elbowed, and Adam Kinzinger reminding all of us this wasn't the first time Kevin McCarthy has done this to somebody. And then I stood up in class last night and tried to tell young people that this is really, these are really the adults in the room who are running our government and have your future in the palm of their hands. This is not a good look. To Bernie Sanders' point, they were trying to talk about very serious economic issues in that hearing. And you think maybe sometimes you can turn to the upper chamber for some collegiality. Not so much this time. It was better. It was more like an MMA fight or Fight Club or something along those lines. It was ugly. And thank God Bernie Sanders was there to get in the middle of it.
I think it was Jimmy Kimmel who called it UFC-SPAN, which does feel like where we are in the world. I don't feel like they're going to be a lot better behaved when they come back. Maybe that's just me, but God knows there's a precedent for it, as the senator mentioned. We did invite Senator Mullen to join us today, by the way, on Sound On, and when he finds some time, I look forward to talking about it with him. Rick Davis and Jeannie Shanzano will hit the trail coming up next. We've got new numbers on New Hampshire and a bit of a shakeup here in the field. It's straight ahead on Sound On after we check world and national news with Nancy Lyons. Let's do that now in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Israel is defending its assault on the Al-Shifa medical complex in Gaza, under which it says Hamas has hidden a military command center. Bloomberg's Roz Matheson has more on Israel's response to criticisms for that operation.
Israel said they were bringing in medical crews and Arabic speakers with them. It's very, very delicate, of course, because this hospital has become the focal point on either side. We know that Israel says Hamas has got tunnels under this tunnel. They're using it, they say, as a staging point for attacks, but also it's a center of civilians who've clustered there in recent weeks into the compound.
Again, Bloomberg's Roz Matheson. The situation in the Middle East is apparently causing the threat level to go up here in the U.S. FBI Director Christopher Wray briefed a House subcommittee this morning.
Since October 7th, we've seen a rogues gallery of foreign terrorist organizations call for attacks against Americans and our allies. Hezbollah expressed its support and praise for Hamas and threatened to attack U.S. interests in the Middle East.
Wray says Americans should not panic, but should be alert and careful. Hunter Biden is looking to subpoena former President Trump and former Attorney General Bill Barr in his criminal gun case. The president's son is looking to Trump and other former Justice Department officials for information in his defense that this is a, quote, vindictive or selective prosecution that violates Hunter Biden's Fifth Amendment rights. That's according to lawyers in a letter to the judge. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After yesterday's rally, the major stock averages, they're kind of bouncing between gains and losses at this hour. As Treasury yields that are waving the baton, yields are higher. The benchmark 10-year was up about 10 basis points. That's putting pressure on the technology stocks, especially Amazon, NVIDIA, Meta, Microsoft, all are laggards in the tech-heavy NASDAQ 100 right now. Now, as for the data, the Producer Price Index last month, that unexpectedly fell. And receipts at the nation's retailers, they slipped, but less than forecast, so the consumer's still alive. Diane Schwank at KPMG says it's almost mission accomplished for the Federal Reserve.
It's not mission accomplished because the Fed is still going to hold rates higher for longer, but we're done with rate hikes, and that's what we've been saying, and that's what we believe. That's the good news out there, is that it does look like the soft landing is not only possible, but probable.
Advanced Auto Parts slashing its profit guidance for the year, but management launched a cost reduction program and named a new CFO, and as a result of that, the share is up over 1%. Overall, S&P 500 up 12, the Dow up 162 points, the NASDAQ up 19 points right now, and a first Joe, the first woman to top a Big Four audit firm, Ernst & Young, picking Janet Troncalli as its next chief executive officer. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
So you're saying there's a chance. Joe Manchin just now asked by NBC News about this possible run for president now that we know he's not running for re-election. Are you considering it? I mean, everyone's talking about it. You can't get through a conversation without no labels and Joe Manchin coming up in this town right now. And guess what? He's considering.
I will do anything I can to help my country.
Is that a yes?
And you're saying, does that mean you would consider it? Absolutely. Every American should consider, if they're in a position to help save the country, I think we're on the wrong course. So I will do everything possible. Now, there's a lot of good people out there I hope I can motivate, and a lot of capable people, competent, that they've just given up.
They've given up. It might just be me. Let's reassemble the panel. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors. Jeannie, you've been waiting for this one. I'm only assuming he's talking to no labels. This is supposed to be the worst case scenario for Joe Biden. Do you think Mr. Manchin goes for it?
You know, I would urge him not to. I still don't see a path forward. And all I can imagine is he ends up being a spoiler. And, you know, his biggest fear coming true, which is that he helps reelect Donald Trump. That's why so many Democrats who otherwise might consider running haven't decided to run. And I know he is saying there is still time. You know, time is running very, very short. So I have to say I agree with Wes Moore when he says, don't do it, Joe. And, you know, the response, not you, Joe Manchin, I mean, but you run, Joe Matthew. But, you know, the reality is that his answer, I find, you know, leaves himself so much wiggle room. So I'm not convinced he's really going to jump in there. And what happened to no labels, by the way, saying they get a Republican on top? I can't see Joe Manchin wanting to be second on that. So, you know, I think there's a lot working against it. And so I would say don't do it, Joe. But, you know, who knows what he decides to do in the end, but I don't think it's a helpful move.
What are you hearing, Rick? Does no labels want Joe Manchin to be part of this? We thought it was Larry Hogan last time we talked about it, or is he thinking about going off on his own?
Yeah, it's kind of hard to tell what his game is. Maybe it's just part of the audition. You know, go out there and say you're going to think about running and see what kind of reaction you get. I mean, no labels is in a kind of enviable position where they get to get around a smoke-filled room and decide who they want. They don't need to ask anybody else. Right. And so just let them all dance and see who's the best dancer. And I think that's what we're seeing today is a little bit of dance moves by Joe Manchin. We've seen the dance moves by the good governor of Maryland, and I'm sure there'll be others that decide to put their hoof to contest. And I don't know. I don't think anybody can really tell what the outcomes of all this is going to be. We've seen so many competing polls on, a Republican or a Democratic being on top of the ticket for no labels. No labels is on 12 states. How that's going to affect any of this, it's only up to a science that I'm unaware of that can predict the outcome in this multi-candidate field.
Unreal. Well, I'd love to hear from both of you on this new poll out of New Hampshire, because it does make you wonder if something real is happening in maybe a re-rating, if you will, of the candidates in the Republican primary. Yes, Donald Trump is blowing everybody out of the water, but this race for second appears to be moving quite a bit in New Hampshire. This is an Emerson college poll that puts Nikki Haley in second place and Ron DeSantis in fourth. So it's then Haley, Christie, DeSantis. How important do we think this is? I know it's just a snapshot, Jeannie, but it's New Hampshire specifically where Nikki Haley could really be basing the hopes for her campaign.
Yeah, I think it's very important. I was just looking back to the polls, and by, around mid-August, she was in the single digits in almost all of these polls. And in a short period of time, she has gone up, still obviously well behind Donald Trump, but in a commanding second place lead now over Chris Christie and Ron DeSantis. And so I think the real issue here is, do we see the governor of New Hampshire, Governor Sununu, start to talk to Chris Christie, potentially, I don't know, Ron DeSantis, but I'm thinking especially Chris Christie, about the real need for the party and in the best interest of the party to consolidate and allow her to have a real shot to go head to head with Donald Trump, because I think he can hold a lot of sway there. And also, does he publicly come out and endorse her? He sounded open to that not that long ago. So, we, I think, have to wait and see. But this is very good news for her campaign, as she has launched this $10 million ad buy in Iowa and New Hampshire as well, and had a pretty good showing in the last debate.
Does this jump off the page to you here, Rick, in that we've been talking about this rise for Nikki Haley really since the second debate, but one that could be a lot more real, again, with Tim Scott leaving and what appears to be an implosion in the DeSantis campaign?
Yeah, I think those are the two big stories, right? That Ron DeSantis has continued to be stifled in his comeback. Even the Kim Reynolds endorsement in Iowa in local polls that we've seen there in the last couple of weeks has not shown any bump whatsoever for a uniquely popular Republican governor endorsing him. And that's why I would caution getting too excited about Governor Sununu and an endorsement. These guys, it's great news the day it happens. Whether or not it changes voters' minds is a really big question. I think that Nikki Haley has been clearly been picking up steam in Iowa, in New Hampshire, all along the way during these debates. They've been very helpful to her, where we find her in a clear second spot. The question is, how is she going to go from there to being able to contest Donald Trump? And that means she's got to sharpen her attacks on Trump, which she started to do right after the debate. And so we're now entering a brand new, section of this campaign where if you want to get any further and you're Ron DeSantis or Nikki Haley, you have to go after Donald Trump. You can't play the game of growing within without attacking him.
Jeannie, we only have a minute left, but you know what else this poll shows? We're talking about Joe Manchin and a potential third party. Joe Biden still beats Donald Trump by 3 when third-party candidates are factored into this poll. Does that make you feel any better?
It does, particularly in New Hampshire, where there's not a lot of love lost for the Democrats and Joe Biden in particular, given his move to South Carolina. So I think that is good news for the campaign, although I always caution it's still within the margin of error, and that it's got to be a bit worrisome to the president's team.
Yeah, the Democrats in New Hampshire not getting along this time around. We'll have to revisit that as we get a bit closer to the first in the nation primary. Our great panel, Rick Davis and Jeannie Shanzano, stay with us for some final thoughts as we get reaction to the fisticuffs that, well, I guess almost happened yesterday in the U.S. Senate. I'm Joe Matthew in Washington. Coming up at the top of the hour, our conversation with Libby Cantrill, and we'll bring Kaylee Lyons back into the conversation. Glad you're with us on the fastest show in politics. This is Bloomberg.
your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters, I'm John Tucker. Let's start off with this company news. Electric vehicle maker Rivian Automotive, they've released what would usually be a pretty startling announcement for the municipal finance market, a potential $15 billion bond for a Georgia campus. In theory, it will be the largest ever muni sale and nearly the size of the company's entire market cap, except those bonds, they're not real. The debt is structured as what's known as phantom bonds. They're used by companies to get a property tax break in Georgia. Involved no real financial or accounting impact for the company involved. Microsoft unveiling its first homegrown artificial intelligence chip and cloud computing processor. This is all an attempt to take more control of its technology and ramp up its offerings in the increasingly competitive market for AI computing. You can think of this as they're kind of de-risking from NVIDIA. The company also announcing new software that lets clients design their own AI assistants. The chip announced at the company's annual Ignite conference in Seattle. Amazon and Google may be next to come up with their own chips for this. And Amazon.com introducing a $2,300 version of its Astro robot. It's aimed at businesses trying to find new life in a product that was kind of slow to take off with consumers. The new model is designed to work as a rolling security guard. And those are some of the company stories we're following this hour. I'm John Tucker, and this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington, where we'll add Kaylee Lyons to the conversation in just 5 minutes and some final thoughts ahead from our panel after we get world and national news covered for you with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. In just minutes, President Biden and Chinese President Xi Jinping will begin their talks in San Francisco. This summit is happening on the sidelines of the Asia-Pacific Economic Cooperation Forum. Dominic Chu is senior analyst for China and Northeast Asia at the Eurasia Group.
We expect modest outcomes from this meeting. It will not change the course of U.S.-China relations, which is on a slow decline due to key differences in their political vision and interests.
Chu says the two leaders are expected to discuss stepping up military-to-military dialogue, more student exchanges, and maybe announce an agreement on fentanyl. The Senate is expected to take up a stopgap spending bill today that was approved by the House yesterday with support from all but two Democrats. Senate Majority Leader Chuck Schumer.
We'll keep working over the course of the day to fast-track the House's bipartisan CR bill. No drama, no delay, no government shutdown. That's our goal, and we hope we have an agreement very soon. To avoid a shutdown with no cuts in vital programs and no poison pills is a very good solution for the American people.
It calls for two separate deadlines early next year, pushing the funding fight to another day. President Biden's son, Hunter, is going on the offensive in the special counsel investigation against him. Bloomberg's Nathan Hager has the latest.
Hunter Biden's lawyers are demanding subpoenas for former President Donald Trump, his ex-attorney general William Barr, and other former Justice Department officials. In a filing in federal court in Delaware, Biden's legal team accuses them all of putting, quote, incessant, improper, and partisan pressure on federal prosecutors. The subpoenas would require Trump and the others to turn over all documents and communications about the Hunter Biden case by December 1st. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Joe.
All right, Nancy, thank you. As we get back to the fight club known as Congress, Senator Mark Wayne Mullen got everybody worked up yesterday. He wasn't the only one, as we've been through several of these incidents in the last 24 hours. But yeah, he was ready to throw down in a Senate hearing with the president of the Teamsters, Sean O'Brien. You surely have heard or seen this.
You want to do it now?
I'd love to do it right now.
Well, stand your butt up then.
You stand your butt up.
Oh, hold on.
Big guy.
Oh, stop it.
If you're with us on YouTube, we're showing you pretty pictures of monuments, just so nobody gets too excited at the moment. I had a chance to talk to Mark Warner about this, of course, a stalwart in the Senate, because things in the upper chamber were starting to look a lot like the House yesterday. His reaction to what happened from Balance of Power on Bloomberg TV. Here's Senator Mark Warner.
What went through your mind when you're watching this?
Oh, God. Oh, it's like, some people up here work hard to get that, 8 or 9% approval rating that we have, and more antics like that, and that 8 or 9% approval rating of the institution writ large. It just, the country deserves better.
That sigh and pause just said everything, right? If you were watching that, by the way, on Bloomberg TV, I came back to him and his hands were covering his face. Rick Davis and Jeannie Shanzano, what do you think of the senator from Virginia and the way he handled that? Because I feel, Rick, like that was about the best reaction we could get. He started by laughing, but he actually got pretty serious by the time he was done.
Serious and sad. I would say he's not giving himself much credit. The latest 538 poll has the approval of Congress at a whopping 19%, not 9%. So they're doing much better than he thinks they are. But yeah, for people like him who take his job seriously, seeing fellow colleagues in the United States Senate act that way is tough.
Is it sad for the country, Jeannie?
It is, and it sounds like a bad 80s movie. I am sorry I'm laughing, because when you play the clip, it can't be real, but I know it is. And the senator saying he's representing Oklahoma
Fight Club.
values.
Rick and Jeannie, hour 2 of Sound On starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
2 major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
President Biden meets with President Xi, and the markets like it. Welcome to Hour 2 of Sound On. As the meeting of the minds takes place today in San Francisco, we'll talk about the stakes and the potential impact, all against the backdrop of what Washington expects will be a government shutdown the beginning of next year. So not a lot has changed in 24 hours, even though the House passed a bill. We'll talk about it with Libby Cantrill, the head of U.S. Public Policy at PIMCO, with insights from Bloomberg's senior Washington editor Wendy Benjaminson. Later, Congress may not have passed funding for Israel, at least not yet, but the flow of weapons not slowing from the U.S. An important story on the terminal we'll talk about with our Pentagon reporter, Tony Capaccio. All that after a look at Wall Street. We get to trading right now with John Tucker in New York. Hey, John.
Hey, Joe and Kaylee, the soft landing narrative gaining some traction for stocks. Stocks are higher. S&P 500 crossing over 4,500. You have 10 of the 11 major industry groups in the index are in the green. And more evidence of a slowing rate of inflation. The U.S. producer prices declining by the most since April of 2020. And also on the data front today, retail sales slowing in October. Well, prior months, they were revised higher, so that suggests some resilience going into the holiday season. Michelle Meyer is an economist with MasterCard.
We clearly have not stopped spending, far from it. I mean, think about the data this morning. It was an incredible combination of continued strength in retail spend, a rebound in Empire State manufacturing, which shows that there's still a need for more goods production. And on top of that, you're getting some relief on the pricing side.
And keeping a lid on stocks today, Treasury yields. The benchmark, the 10-year yield, 10 basis points higher, up to 4.55 right now. The 2-year, 9 basis points higher. That is at 4.92. Overall, here are the numbers. S&P 500, 14 points higher. That's up 0.3% at 45.10. The NASDAQ 100, 28 points higher. That's up 0.2%. The Dow Jones Industrial Average right now, 180 points higher. And Joe and Kaylee, the GM UAW contract, it is due to be ratified today. At least the deadline today still hangs in the balance. Looks like voters are split at a couple of the key GM plants. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business. Business Flash.
John, thank you. And welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew in Washington with Kaylee Lines. And if you were on YouTube a little while ago, you already know that. You never know what you're going to see on the interwebs here on Sound On, and you can join us now by searching Bloomberg Global News.
I'm here.
There she is now. Kaylee Lines, nice to see you. Kaylee joins us every day for the second hour of this conversation, and we've got a lot to talk about. Did you hear John Tucker talking about GM?
Yeah.
Are we worried about this contract?
Yeah, well, when we think about the deal that was signed, which of course includes the big wage increases, a lot of other concessions to the union that the union wanted, it was never a guarantee that the union was going to ratify it. It was a deal in principle, essentially a tentative deal. And we know that at least some workers at some of these specific GM plants don't seem to be as for it as maybe you would have thought.
Yeah, this is interesting. I thought Sean Fain had a sense of the rank and file here, but maybe this is more complicated than we thought. It's something we talked a lot about, though, during the strike.
Absolutely.
And I don't want to drop this bead as long as this is still a story. We'll keep you posted on that. Of course, here in Washington, I was joking earlier, you can't get off the exit on 395 to National Airport because the entire House of Representatives is already in line.
Getting out of town.
In front of you. The Senate still has some work to do. It looks like the Senate will pass this bill that cleared the House late yesterday. That'll fund the government into January. Did you hear Chuck Schumer this morning? He's going for it. This is the Senate Majority Leader filing cloture on the floor, the procedural vote that would bring us to the actual funding.
I move to proceed to calendar 248, H.R. 6363.
Clerk will report. Motion to proceed to H.R. 6363, an act making further continuing appropriations for fiscal year 2024 and for other purposes.
I send a cloture motion to the desk.
Send it to the desk, Kaylee Lines. That means it could happen as soon as today, by the way.
Yeah, well,
so
he
there
said
could be like another line at the airport tonight.
Yeah, they want to get this done ASAP. And something tells me the House getting to go home until November 28th might fire up some senators who also would like to get on their own airplanes, trains, automobiles, however it is they're getting home for the holiday.
It's Wednesday today.
Yes.
A week from today, it still won't even be Thanksgiving.
Yeah, well, you know how this works. Congress gets
I want that plan.
Extended holiday weeks.
I want that.
Would be nice if we could do that too, but
Mark Warner told us last night he's on board.
Yeah.
They don't want to shut down the government, even though they don't like the process. So then, of course, we're not sure exactly what's going to happen in terms of the vote count.
Yeah.
But Wall Street seems, I guess, pleased. Not that they were ever freaked out to begin with. I think this is like Boy Who Cried Wolf from Washington to Wall Street.
Yeah, I mean, Wall Street has lived through government shutdowns before. I think by and large, the lesson we have learned is financial markets are more concerned about debt ceiling fights and potential default on the U.S. debt versus government shutdowns, which have a relatively limited economic impact, though the economic impact is still there. It's not necessarily something markets get overly concerned about. And at the very least, the market probably is looking at what happened in the last 24 hours and saying, okay, we can at least breathe until January 19th. Maybe we'll start getting freaked out a little bit before then.
We will, because 3 days before that
is Iowa.
The Iowa.
Yeah.
This is, you better rest up over the holidays. I bet you Libby is. I told you Libby Cantrell was coming in. She's with us now, the head of U.S. public policy at PIMCO. On the line, Libby, I saw your note to clients, and I guess we're feeling pretty good about things here, but nothing's changed, has it? Don't we just shut down in January?
Yeah, good afternoon, Joe. Yeah, basically, this is Congress has done what they are very good at, which is just kicking the can down the road. As you know, there are now two deadlines. Leave it to Congress to overcomplicate something that should be more simple. Two funding deadlines, January 19th, as you just mentioned, and then also February 2nd, which happens to be Groundhog Day, maybe wittingly or not. They made that deadline. And it just sounds
Wait, is that real?
Yes.
February 2nd is ground. Did they do that on purpose?
I don't know. I mean, maybe it's a wink and a nod. But I think the most important thing here, and you're right, I mean, markets have sort of shaken this off for the most part. I think there was more focus at the end of September. I think then there was just the assumption that this would get resolved this week, which of course it looks very likely to. We would be surprised if we didn't see a big bipartisan vote in the Senate and then President Biden quickly signing this into law. But, and the big but here, we will have to revisit this come January 19th. And it looks like while the House Freedom Caucus, the right flank of the House Republican Conference, is giving Speaker Johnson a break for now, they will not come January. They are insisting that there has to be spending cuts, or else. Chip Roy has indicated, Representative Chip Roy, who is part of the House Freedom Caucus, has indicated this is strike one and strike two for Speaker Johnson, and so it does seem that the stakes will be much higher as we go into January. And in terms of the markets, I mean, again, the markets haven't really been focusing on this. However, you could argue that some of this increase in the term premium, basically the premium that investors have to pay, that the U.S. government has to pay investors in order to take on their debt, maybe has something to do with just questions around just functioning and governance in Washington. But it's difficult to sort of disentangle all the reasons for why the term premium had increased over the last 6 weeks or so.
Yeah, well, if you ask Treasury Secretary Janet Yellen, she doesn't think that has anything to do with the debt and deficit. It's just the idea that the economy is really strong and rates are going to stay higher for longer. So I guess, Libby, it depends on who you ask. To the point you were just making, though, about maybe the House Freedom Caucus, some of these ultra hardline conservatives aren't going to be giving Mike Johnson as much of a break come early next year. We also heard from Congressman Bob Good of Virginia. He was speaking to reporters earlier, and he said the speaker has said he wouldn't do another CR. We're going to hold him to that. So, Libby, with the passage of a clean CR now, does it only intensify the idea that there will be a shutdown next year because Speaker Johnson is going to have played that card already and not going to have an option between shutdown or spending cuts that Democrats won't go for?
Yeah, I think that's exactly right, Kayleigh. I think that the release valve that both Speaker McCarthy and now Speaker Johnson have used, it will not be available to Speaker Johnson if he wants to keep his speakership. It sounds like that is what is the sort of implicit threat here, that come January 19th, if the funding bills for that part of the government that deadline applies to, if that hasn't passed, then folks will threaten his speakership if he has to use another CR. The thing is that, practically speaking, you already just saw this today in the House, and this is sort of noise, I think, to investors, but it's sort of important in Washington, is that the appropriations bills have not been able to pass, even on a partisan basis. And I think this is kind of the big takeaway and sort of revealing in terms of the Republican caucus that there are obviously lots of different factions. They call it the five families on the Hill within the Republican conference, and they're not necessarily getting along very well right now. And that does not necessarily portend well to meeting that January 19th deadline of passing appropriations bills, even if it's just relying on Republicans. So I think the bottom line here is the stakes seem higher going into January. The chances seem higher of a shutdown, honestly, in January. But as we've just been talking about, does this really matter to the market? Probably not, unless it's a sustained shutdown. And then there's another shutdown deadline on February 2nd. So the full government shuts down, then I do think it could, markets will be taking notice.
We're talking with Libby Cantrell at PIMCO on Bloomberg. As the president today, Libby, sits down with Xi Jinping, the president of China, here in the U.S. for the first time in 6 years. They're sitting down in San Francisco for what is described as a high-stakes meeting based entirely on our lack of relationship over the last 9 to 12 months here. Then again, expectations are pretty low, and we keep hearing that this is a market positive, just the fact that they're sitting down together. Is that how you see it?
I think that's exactly how we see it, Joe. This is the first time that President Xi has met with a U.S. president on U.S. soil since 2017. This is, the first time where both leaders are kind of coming together with, I think, at least sort of hands open a bit, more than what they have during Biden's administration. So I think the meeting in itself is the deliverable. The meeting is what folks on both sides were trying to deliver. I think outside of that, we don't expect there to certainly be any kind of grand bargain on sort of the economic tool statecraft, if you will, in terms of rolling back tariffs or anything announced on export controls or what have you from the U.S. side. I do think, though, that one area of potential agreement and that could come out in an announcement could be the reinstatement of military-to-military communications. That is something that certainly the U.S. administration is prioritizing. I mean, just remember that even during the Cold War, the U.S. had principal-to-principal level channels of communication open with military folks and with the USSR, so during the Cold War. So the fact that we haven't had that with China since August of 2022, of course, that's when Speaker Pelosi went over to Taiwan, and then the China kind of cut us off for all intents and purposes. So I do think that I know that's a priority of the U.S. administration, I think for good reason from a national security perspective. And so I would not be surprised if we saw an announcement around that. But outside of that, I doubt we see much coming out of this meeting. Again, the meeting itself is the deliverable.
And of course, Libby, the meeting with Biden isn't the only meeting that Xi Jinping is going to have. He's dining tonight with a bunch of executives of big companies. We don't know exactly who is on that invitation list for dinner, but we know the likes of Jane Fraser, Elon Musk, Satya Nadella. They're all going to be at the CEO summit that's happening on the sidelines of APEC. So it'll be interesting to see what the business-oriented conversation is, because we were having a conversation with Gerard DePippo, who's one of our geoeconomics analysts here at Bloomberg Economics last night, and he basically told us, look, whatever the messaging from the Biden administration is about whether or not there is a decoupling they're pushing for with China, ultimately these decisions, a lot of them come down to private actors, what businesses and what people do. And Libby, aren't we already kind of seeing that?
Yeah, that's an excellent point. I do think it's quite a tell that President Xi is meeting with these U.S.-based CEOs. I think if you look at the most recent FDI, the foreign direct investment data in China, it is sort of dropped off a cliff in many ways. And so I think that it makes sense that President Xi is trying to, reaffirm or reassure in many ways that China is still open for business, that it is still open to U.S. investment. But you make an excellent point that regardless of what the public policy is around here, the sort of the political risk of investing in China has certainly increased from the U.S.'s perspective. We see that with some of our clients, based in the U.S. And then, of course, there's some economic headwinds, as we all know, in China. So it's dovetailing at a time where investment may not be even that attractive, going into China. But again, I think this is sort of a revealed preference, if you will, on President Xi's part, where he is, showing that he does want to kind of again reassure U.S. and U.S. business that China is still an attractive place to invest. Whether it resonates, is an open question.
Sure. What do you have a feel for that, Libby? I just wonder if this is the new normal here, if there's going to be some thaw or, a motivator to start investing in China again after so many people got burned.
Yeah, and you saw, today that the federal thrift retirement plan is going to be moving away from some of their Chinese investments. Again, there have been lots of, U.S.-based pension plans, big allocators of money that are not necessarily divesting, but they are not necessarily making new investments in China. And I do think this is sort of where the intersection of investing and policy is very acute, or policy or political risk. A lot of those folks, a lot of those allocators just think that, they question about obviously the economic attractiveness of China, but then also the destination, but also just the domestic political risk. And what we've seen on the Hill, that the House Select Committee on China, they very much are scrutinizing capital flows from the U.S. to China. We also have seen the Biden administration put out an executive order in August, basically looking at capital flows into very specific sectors. They try to be very targeted and very surgical, but still. So I just think in general, the kind of the threshold for investing, if you're a U.S.-based investor, especially a big one with some headline risk, has increased.
We're just about out of time here, Libby, but I do appreciate your taking a swing at that question. I'm Joe Matthew in Washington.
Profits. Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages, right now, they are higher. They paired some of the earlier gains. Adding to yesterday's rally, the S&P 500 topping the 4,500 mark. Not by much, but it's still higher. Among the data, we had another mild inflation report with the Producer Price Index. The retail sector also got some favorable news, including a surprisingly good earnings report from Target. And those shares, well, they're surging up over 17%. You have 340 stocks higher in the S&P 500. 164 are lower right now. S&P 500, 9 points higher. That's up 0.2%. 4505 on the index. The Dow Jones Industrial Average, 153 points higher. That's up 0.4%. The NASDAQ 100, that's been kind of bouncing between gains and losses right now. 9 points higher at 15,821. The 10-year yield, this is the difference today. It's higher. It's up 10 basis points at 4.54. And Bloomberg Economics says expect modest outcomes from the meeting between President Biden and China's Xi Jinping in San Francisco at the APEC summit. They just shook hands. Agreements could include a resumption of military-to-military talks, Chinese purchases of U.S. airplanes, in particular from Boeing, and maybe, just maybe, Joe and Kaylee, new pandas for the National Zoo. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Keely Lines on Bloomberg Radio.
Just another day in Washington with a long line to get to the airport. Is everybody ready for Thanksgiving? I guess the House is. I'm Joe Matthew in Washington alongside Kaylee Lines. As we get our first images here, Kaylee, of President Biden and President Xi. The arrival took place just a moment ago. If it's possible to show these pictures, that would be great. We've got a very long table here that's been set up in San Francisco, and I see the Commerce Secretary along with the President,
Treasury
of course.
Secretary as well.
Yes, indeed, as you would expect. She actually welcomed him on the tarmac with Gavin Newsom in San Francisco. We'll talk more about this meeting in a moment with Wendy, but no questions answered at the arrival. They simply shook hands and walked inside, and we should not be surprised by that.
No, probably not, and maybe not all too surprised as well at the idea that we're going to hear later today from President Biden, but that will not be a press conference that Xi Jinping is participating in with him.
Yeah, that's actually a good point that we haven't even mentioned yet. Around 7:15 is what we expect.
I believe,
it's going to be a
Eastern
solo news conference. We will carry it here on Bloomberg, and we'll
course.
have full coverage for you. Of course, it's going to be a little bit later on in the day here because he's on West Coast time. And we've got an eye here as well on what's happening. As the Senate makes a little bit of news here, Kaylee.
Yeah.
We knew that this was going to move today, or could still move today, I should say, because Chuck Schumer filed cloture on the House bill. You know, the Senate had its own CR, so I guess they went crinkle, crinkle. Let's use the one the House has because everybody wants to go home.
Yeah, well, if they tried to do something and send it back to the House, everybody would have to fly back into town because everybody's flying out of town today. But yeah, you're exactly right,
fly out of town.
Joe. It became pretty clear in the last 24 hours that the Senate is going to pass this. It was a question of when exactly, and knowing that this is the United States Senate and procedurally you need buy-in from everyone if you want to do things fast because that's how it works. It was just a question of whether you were going to get that unanimous consent to accelerate this process. But if it's accelerated, we could see it today.
Wendy is with us. Wendy Benjaminson, of course, Washington senior editor who we talk to each week at this time. Chip Roy's got a real problem with this.
Chip Roy has a chip on his shoulder.
Well, you might say so.
Does.
First, the original sin of passing a CR, a clean CR without cuts. Then another sin. Maybe I should have gone with strikes.
Yeah, that's what he's going with.
That is what he's going with.
Make it about baseball.
You did it with Democrats, and then the strikeout is the way this was brought to the floor without a rule. You guys took a big route around the Freedom Caucus. So now everybody's talking about, well, this could be a shutdown in January. Could it also be a motion to vacate? Is Mike Johnson going to get fired yet?
You know, I wonder about that. You'd sort of think given that old line about the definition of insanity is doing the same thing over and over again, I mean, there are, we've had almost two speakers since the Republicans took the majority. So there are 220 Republicans left who could be speaker.
Yes,
right. And
a few of them have already tried to
get
it.
Right, that's why I said
have to
two
roll
or
those
so.
out.
Yeah.
Back of the napkin.
So they could keep doing this, but it seems like not a great idea in an election year. If I may bring it up again, the Bloomberg News Morning Consult poll did show that swing state voters are more likely to vote Democratic for a member of Congress after watching the speaker fight. So if House Republicans are listening to me now and saw that in the poll, they might think twice about doing this if they want to keep their majority. Because people are much more interested in keeping the government open, getting their priorities spent on, than they are who the speaker is. And most people honestly don't know who the House Speaker is and don't care.
Well, that's fair enough. As you talk about the perception on the Republican side, arguably maybe that's why Democrats have gone along with this relatively easily, because they also don't want to be the party that said no and allowed the government to shut down. Certainly President Biden doesn't want a bill to come across his desk and then he veto it and be the reason the government shuts down. But while I have a lot of questions about the way Republicans handled this, Wendy, I do have a lot of questions about whether Democrats really gave Mike Johnson kind of an easy win here, and if some leverage has been given up in that process, knowing that they want Ukraine funding, for example, that a lot of Republicans don't.
Well, in a normal world, it is a big win for him. But gauging Chip Roy's response, saying he's at strike two, hinting at a motion to vacate, they may have actually given him a loss by giving him a win. So as far as the country is concerned...
That's pretty Machiavellian.
We did.
Let's go down that road with Wendy.
But, he didn't put any poison pills on the spending package. He excluded the aid to Israel and Ukraine, which are going to be debated soon, but not in this one. They didn't put they stuck to the spending cuts they agreed to with the White House several months ago. The spending levels, I should say. And so there was really no reason for Democrats to vote against this, knowing that they could get the foreign aid funding bills passed soon, knowing that they, at the moment, didn't have to do a spending fight. Why not vote for it? And then, if Mike Johnson gets in trouble with the hard right Freedom Caucus, it's not their problem.
But couldn't we argue, actually, that Democrats got a big win? Ask Pramila Jayapal, in that it's a clean CR.
Absolutely.
That was enough to get the last guy fired.
Absolutely. A smart colleague of mine here at Bloomberg yesterday said maybe Pramila Jayapal ought to stop talking about what a big win this is if she wants it to pass.
Exactly.
And yet, that's exactly what happened. They passed it. I could see speakers of the House in previous years going to the rostrum and saying, hey, we got a bipartisan bill passed. Isn't this great? And they're being, cheers and applause. But right now he's looking over his shoulder at Chip Roy.
Yeah, and maybe a few others. Wendy, I'm not looking over my shoulder. I'm actually looking down at my screen, and you can see the fact that I'm trying to watch Wendy and watch my screen at the same time if you're joining us on YouTube. But because there is this bilateral meeting happening right now between President Biden and Chinese President Xi Jinping, Xi telling Biden that U.S.-China ties are the most important bilateral relationship, going on to tell Biden it is unrealistic for one side to remodel the other. What do you think is a realistic, tangible outcome from this meeting, Wendy? Or is the only outcome the fact that it's happening at all?
I do think that is a big tangible outcome, that it's happening. And we've talked about this before here, is that just the ability to talk, just the ability to have a relationship and be able to pick up the phone later and speak to each other is better than not speaking, because when you stop speaking, that's when misunderstandings can happen. They have gotten some commitments. John Kirby has told us today over climate change, getting China to put some more controls on its carbon emissions. That's a win. Getting this deal for them to crack down on fentanyl, which may come out of this fentanyl production, that would be a win. And yet we are also apparently, the United States, I should say, is apparently going to hold the line on, not hold the line. They're going to say, we're not going to stand in the way, either way, of Taiwan's independence. so that also kind of gives China a little face-saving thing. But at the moment, it seems like it's all going well. Now, for Biden, the trick will be getting American voters to pay attention to that.
Yes.
Even given the economic news he got this week.
Well, especially, Joe, Wendy always points back to our wonderful polling we've done with Morning Consult, but it shows that what voters care about isn't so much these foreign policy issues, but the U.S.-Mexico border, for example. And for a president that's focused very much on foreign policy, if it's domestic kitchen table issues that people vote on, Wendy, it makes you wonder how much an effort like this actually helps him when people go to the polls next year.
Right. Well, it's all in the messaging. And this is something that Democrats aren't as good at usually as Republicans are. But the big complaint is that China produces fentanyl, sends it to Mexico, or the chemicals you need to do it. The Mexican cartels turn it into fentanyl, and they take it across the border. So if they can't do that anymore, that would be a big border win for the Democrats, which would make them seem less loosey-goosey about, people coming over the border, which is what the Republicans are complaining about. And the Democrats can't, build a wall. So the immigration question is elusive, but maybe he can get a win out of saying, I've stopped fentanyl from coming across the border.
Well, I guess we'll find out at some point. I thought we might be hearing or seeing the president here, but we'll let you know as we make our way through this here on Bloomberg. I'm Joe Matthew in Washington with Kaylee Lyons, and big thanks to Wendy Benjaminson, Washington senior editor, as we move now to bring you up to date on world and national news. For that, we turn to Nancy Lyons in the Bloomberg 99.1 newsroom. Hi, Nancy.
Thanks, Joe. President Biden and Chinese President Xi Jinping have greeted each other with a handshake. They're now meeting in San Francisco, their first face-to-face in a year. Bloomberg's Anne-Marie Hordern is covering their summit.
Well, this White House wants to get this relationship back on track. Obviously, Xi Jinping and President Biden are walking into this meeting after a year of true acrimony between these two individuals. At this moment, one of the highest priorities for the White House is just to get basic military-to-military communications back to a normal cadence.
Bloomberg's Anne-Marie Hordern says she will also be having dinner with some top U.S. CEOs in hopes of enticing more U.S. companies to invest in China that has been suffering economically. Senate Majority Leader Chuck Schumer says he wants to work quickly to pass a stopgap bill to avert a government shutdown.
Today, my Democratic colleagues and I will work with Republicans. I will work with Leader McConnell to see if we can come to an agreement to accelerate this bill's passage. If both sides cooperate, there's no reason we can't finish this bill even as soon as today.
Lawmakers in the House overcame partisan animosity yesterday to pass a temporary government funding bill that greatly lowers the risk of a shutdown, even if it does delay fights over Ukraine aid, border policies, and deep cuts to federal programs. Democratic Senator Joe Manchin is not ruling out the possibility of running for president. He was asked about it today by NBC's Meet the Press host, Kristen Welker.
Are you considering running for president?
I will do anything I can to help my country.
Is that a yes?
And you're saying, does that mean you would consider it? Absolutely. Every American should consider if they're in a position to help save the country.
Manchin recently announced he would not run for re-election to the Senate, but said he would be going on a cross-country tour to listen to Americans' concerns. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with your Bloomberg Business Flash. Seeing stock gains as optimism has been building on bets that interest rates are peaking and the Fed is done raising rates with inflation slowing. The S&P 500 has gained just about 9% in the past 12 sessions. Well, it may have been more, except for the fact that the bond yields, they're surging. 10-year Treasuries gaining more than 10 basis points today after we saw that big decline yesterday. Bond bulls kind of scratching their heads at this sell-off today. Still, the conditions are in place for stocks to rally, at least according to David Sowerby at Ancora Advisors.
If Jay Powell is the head lifeguard blew the whistle, get back in the pool. You had likelihood of less Fed tightening, pausing. Sentiment, unusually bearish. That's a good contrarian indicator. And out of third quarter earnings and cash flow, that's been very good.
Right now, the S&P 500, 17 points higher. That's up 0.4%. 45.12 on the index. The Dow Jones Industrial Average is up 205 points. The NASDAQ 100, 42 points higher. And after the surge in small caps yesterday, the Russell 2000 higher again today. It is up 0.4%. Big box retailer Target soaring on solid earnings. Shares of Target right now 17.5% higher, while Nvidia shares dropping after a 10-day winning streak. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
The matter of funding Israel and Ukraine still up in the air, even though there does seem to be a path to avoid a government shutdown at the end of this week. I'm Joe Matthew alongside Kaylee Lines. It's unclear, Kaylee, when the money for Israel or Ukraine would be passed, or in what form. Is it all in one bill? They get this with some other sweeteners. We'll figure that out, and it might take weeks. The fact of the matter is, though, this funding argument is not slowing the flow of weapons from the U.S. to Israel. Quite the opposite. If you read what Tony Capaccio is reporting from the Pentagon for Bloomberg, by the way, everybody picked this up. This was in the playbook this morning, and I don't know anyone else who's reporting this. And we had Ambassador James Jeffrey weigh in on this last hour. Pentagon ramping up military aid to Israel, as I read from the copy, from the terminal, on requests that include more laser-guided missiles for its Apache gunship fleet, 155-millimeter shells, night vision devices, bunker-busting munitions, new Army vehicles, the new Humvees, even apparently kamikaze drones that we don't even have.
Yeah. This is a whole lot more than just the replenishments for the Iron Dome that we've heard a lot about since this conflict erupted over a month ago. But of course, we've heard consistently from the administration that the U.S. is going to be there for Israel, provide whatever support it can. And until additional funding comes through, I guess the Pentagon is doing everything it can with the power and the equipment it already has.
Yeah, for sure. So we thought Tony might come over and talk to us about it. He just made his way across the river from the Pentagon here in the Bureau at our desk. Tony Capaccio, it's wonderful to see you.
Even better seeing you two.
Well, that's nice of you to say. You're the man of the day here. This is the story in Washington. Why do we need funding if we already have all the stuff they want?
Well, wait,
am I reading it wrong?
Funding to replace. There's different issues here. There's the Ukraine funding.
Yep. Let's start with just Israel, though.
Okay, Israel, we're giving them equipment that we have in our inventory that we haven't given to the Ukraine.
Is this in advance, though? Because we're talking about $14 billion on Capitol Hill. That would help to pay for some of this?
Yeah, I don't think it'll pay for the small, not small arms, but the Apache equipment, the munitions. The $14 billion for Israel, there's $3.4 billion of that for weapons, basically. $3 billion of that is for the Iron Dome. It's like 14,000 interceptors and like 100 more launchers, which means they could exponentially expand their current 10 battery arsenal over there, but quite a bit. These are talking about Army inventories, mostly Army equipment that the U.S. would eventually pay back through the other supplementals, I think. But what's on the Hill for Israel now is not reflected in my story today. The 30-millimeter rounds, the Hellfires, those will be paid for later. Going forward, the money in the supplemental is for Iron Dome, David Sling Stunner missiles, and it's up to 100 launchers, which is a big deal. The Ukraine issue, total stop. The Pentagon right now has authority to spend $4.9 billion more in presidential drawdown packages. They have authority to do it, but they only have appropriations to spend $1 billion to replace that money.
Understood.
So we're not at the end of the line of the spigot yet. The end of the line of the spigot. The spigot's not being turned off yet. There's still more drips, of $4.9 billion worth of drips for Ukraine. But if you want to shoot
more specific than anything I've heard this week, though, Kaylee. Actually.
Yeah.
That gives us a very good sense of
So
where we are.
there's authority and then there's appropriations, like the way the Hill works.
Well, and when I look at what is a very extensive list of the military aid the Pentagon is already sending to Israel, is there anything Israel is asking for that the Pentagon does not already have the authority or the ability to give them?
Not that I'm aware of. There's an interesting nuance, though. We have a war reserve over in Israel, a contingency reserve of munitions and equipment for Middle East conflicts. Within the supplemental, there's a request to waive a limit of $200 million a year in the value of equipment we can put into that fund, that reserve that Israel can draw on, but it's not a limit on. It doesn't raise the limit on what Israel can actually pull. It's a waiver, a request for $200 million.
Last hour, and he said, not in the hands of the Israelis. They know how to use these things. What's the Pentagon's response to that?
Frankly, I haven't asked, but I can give you an explanation here.
Fine, yeah.
These are not those Excalibur GPS rounds that we've given Ukraine. We've given them like 8,000 of these Excalibur rounds.
These are old-fashioned mortar rounds, right?
Well, no, these are howitzer rounds, but Israel's got much precise technologies for triangulating where these weapons would go, where these howitzers would go, where the shells would go. So I give them more credit than they would just be indiscriminately sent. These are high explosive rounds, by the way. They're not the cluster munition types that we've sent to Ukraine. I saw some reporting saying that the U.S. was sending cluster versions of the 155s. What I saw was HE, called high explosive.
Got it.
But I gave Israel more credit in terms of their ability, their command and control ability. They're in a highly precise military in many ways, but to put these things basically where they're intended to go, even though they're not GPS guided.
Okay, so that's what Israel could be sending into conflict zone, right? There's also a question of what's coming out of the conflict zone trying to get into Israel, hence the Iron Dome and what has been with a fair degree of accuracy, a high degree of accuracy, I would say,
amazing.
Intercepting of those missiles. Do you have a sense of how the Pentagon is trying to balance what Israel needs weapon-wise outbound and then that defense system? Or does that make sense?
I understand what you're saying. Yeah, I think this supplemental request for 14,000 interceptors, that's a lot. If you look at it this way, Israel hasn't really said how many they've fired over the last decade, but if they claim 9,000 intercepts or 5,000 intercepts, give or take one or two missiles per missile, one or two interceptors per bad guy missile, a Hamas missile, you get a sense of what they've fired to date. I mean, maybe it's 10,000 or 12,000 have actually fired. Wow. But if we're giving them capability to build 14,000 over the next X number of years, that's an exponential increase. But the launches, to me, is a big deal because that just expands the amount of places you can cover.
It's a fascinating insight. We only have a minute left here. Nathan Dean said yesterday, watch the companies that make the munitions, not the hardware. Isn't that how he put it? Would that be RTX in this case, making missiles for the Dome? Does anyone we ever heard of make these 155 shells? Where do those come from?
Those come from the Army. General Dynamics is a prime contractor, and the Army's got 5 munitions plants, and they make different facets of the shell.
So it's still Raytheon, General Dynamics, Lockheed soaking up all
Boeing
this
too.
money. And Boeing.
Yeah, well, soaking up all this money. Here's the downside. A human rights group finds a fragment in one of the hospital areas of a JDAM that you can track back. That's Boeing's worst nightmare and the Pentagon's worst nightmare.
Tony would be the one to write the story. Tony Capaccio, great to see you.
Thank you, sir.
This is Bloomberg.
your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm John Tucker. Ernst & Young has picked Janet Troncalli as its next chief executive officer, placing the first woman atop a Big Four audit firm. This move comes just months after the accounting firm scrapped its planned breakup. And then you have the chief information security officer at Clorox has left the company as it works to recover from a hack that devastated the supply chain of the company earlier this year. Amy Bogak departed after 2.5 years in that role. This is according to an internal memo and a couple of people familiar with the matter. Her last day was Friday. The memo reviewed by Bloomberg doesn't address the reasons for the departure there. Microsoft has unveiled its first homegrown artificial intelligence chip and cloud computing processor. This is an attempt to take more control of its technology and ramp up its offering in the increasingly competitive market for AI computing. They're kind of de-risking from NVIDIA. The company also announcing new software that lets clients design their own AI assistants. And Amazon.com introducing a $2,300 version of its Astro robot aimed at businesses trying to find new life for a product that was kind of slow to take off consumers. The new model is designed to work as a rolling security guard. Also comes with a subscription called Astro Secure, which Amazon says allows the robot to patrol areas on its own. Those are some of the company stories we're following this hour. I'm John Tucker, and you're watching and listening to Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
We're live from Washington, where we'll get into the condiment habits of Mitt Romney coming up. Remember Hot Dog Day? That was a pretty big deal around here. We're extending that conversation to salmon coming up with the senator from Utah. That's after we get up to date on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. President Biden and Chinese President Xi Jinping are meeting right now in San Francisco. President Biden started things off on a positive note.
I value our conversation because I think it's paramount that you and I understand each other clearly, leader to leader, with no misconceptions or miscommunication.
President Xi told Biden the U.S.-China relationship is, quote, the most important bilateral relationship in the world. The Israeli military continues to target Hamas and has raided the Gaza Strip's main hospital, the Al-Shifa complex, where a Hamas command center is believed to be hidden underground. Bloomberg spoke earlier with Israeli government spokesman Elan Levy about the operation.
The Shifa terror compound is, of course, a very important target. It would be a very serious blow to Hamas, but we should be under no illusions that if that is overrun, and of course we show all that evidence to the international media, that the operation will be over, because we cannot allow Hamas to regroup, rebuild, and remetastasize across the Gaza Strip in order to pose a threat to our people.
Israel has come under criticism for attacking hospitals, causing thousands of civilian casualties. Well, Americans should remain alert. That's what the House Homeland Security Subcommittee heard today from top administration officials concerning the rising threat levels.
Chairman Mark Green presided.
This is one of the most dangerous times in the history of the United States.
Green then asked the director of the Federal Bureau of Investigation, Christopher Wray, about the vastly increased number of migrants crossing the Mexican border.
If that number were lower and the border wasn't as open as it is, we'd be safer.
Greater fidelity about who's coming in this country and how they're getting in is essential to making sure we protect Americans from all sorts of threats.
I do too.
Wray also said that war in the Middle East has brought calls from terrorist groups there to intensify attacks on Americans. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Joe and Kaylee.
All right, Nancy, thank you. There's a bit of talk about Mitt Romney on Capitol Hill today. Yesterday it was the fights. Today it's the food.
Yeah. Food fight?
Yes. Lisa Murkowski, of course, the senator from Alaska, big fan of salmon.
Yes.
As you would expect. Kind of a
Makes
big
sense.
deal in Alaska. Mm-hmm. What she refers to as the greatest seafood in the world. Until it makes its way to Utah, when apparently the senator in Utah needs to add a condiment to the seafood.
Right.
This is not tartar sauce either. Lisa Murkowski in conversation with the Washington Post.
Oh my gosh. Like the best wild seafood in the world.
Which it is, yes.
It is, and he puts it on a bun with ketchup. I really love Mitt Romney. I do. But I do question his eating style. But
will you stop giving him Alaska salmon?
No. What I will do is I will make sure that I've cooked it for him ahead of time so that it's beautifully prepared as it should be, and he won't have to put ketchup on it.
So I guess that means no more stocked freezer full of salmon from Lisa Murkowski for Mitt Romney. It's only coming fresh.
That's right.
So that she can deliver it how
he's stuffing in
she
a
wants
bun.
it eaten.
You ever done that with a piece of salmon? I mean, I guess a salmon burger might work, but what she should do is just forget the salmon. Get the poor guy what he likes best.
Well, as you all know, today is National Hot Dog Day. And perhaps you also know that hot dog is my favorite meat.
My favorite meat.
There you go.
As opposed
Forget
to
the salmon, Joe.
That's correct. And at that point, he made clear, with ketchup or without. But he did put ketchup on that dog that he ate on camera. And some people might have a problem with that. Pass the mustard.
Relish?
That's fine. Yes, that's totally acceptable. As we hand the baton to New York, Haley, I'll meet you on Balance of Power later on. Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Very good afternoon, everybody. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and, of course, on Bloomberg Originals. It is Wednesday. Happy Hump Day, November 15th, 2023. Carol Master along with Tim Stenevec. Stocks, bouncing around a little bit.
Yeah, I mean, they can't go up by a percentage point every day.
Who says?
It's just the law.
Mr.
I'm sorry,
Bear.
it's the law. I do have sort of like this, I can't get over what Jamie Dimon said yesterday.
What did he say yesterday?
That investors are overreacting
yeah.
to these numbers. I'm going to bring this up again later. So
Didn't Ken Griffin say the same thing?
yeah, so I kind of like,
Slow your roll, everybody.
you got to slow your roll.
That's the kind of year it is.
Yeah.
All right, we're going to talk about that. But as we said, stocks kind of, bouncing around. Bonds, though, definitive move. Yields definitely coming off their lows. We saw them sink yesterday, moving up today. With all of that in mind, we're going to get into today's weaker U.S. data. Nation retailers also putting in some mixed performances. We're talking about Target and TJ Maxx, although, and investors reacting differently. But we're going to get into that retail sales data for the latest read, but also those revisions higher. Like, what does it really mean, right?
I mean, is it exactly what the Fed wants to see?
I don't know. Soft landing?
Yeah, it's kind of what the market
People
is
slow
saying.
down a little bit?
It's what the market is
Or
saying
not?
a little. I don't know.
You're just not buying refrigerators? I don't know.
I think a lot of this has to do with gas.
John, it's all about refrigerators.
A lot of this has to do with gas prices, and that's what we're going to talk about with Mike McKee a little bit later. That's what I'm interested to hear. Also, the much-anticipated and highly charged meeting between the world's two economic mights. Meeting's important, yes. We're going to get into what really matters, though.
Talking about Xi and Biden, so we're going to get to that in just a moment. And we're also, speaking of anticipation, Elon Musk has been dangling the prospect of a Starlink IPO for years. Musk says, ain't happening. He actually says false.
That's all he said on X.
A man of few words.
Somebody tweeted out the
Alas.
story that our own team here at Bloomberg News wrote, and he replies, false. That's it.
Yet according to those familiar, it may now be ready for liftoff, that IPO. So we're going to dig into that a little bit.
And a really powerful story in the magazine. Human smugglers, they're taking to social media to recruit so-called coyotes.
Kind of riveting reading through this story.
It really is.
And the people that are being recruited, and then kind of the mental debating that went in their head, like, I need the money, should I do it, should I not? It's just crazy. And then we're going to talk about coffee and sustainability with the chairman of the 90-year-old coffee company, Ely Cafe. Fascinating what they are doing over in Rwanda, but there's a few questions we have.
You think he'll bring some coffee?
I don't know. I don't drink coffee after,
You might have to today.
All right, let's talk markets. Right now, we're heading over to our TV colleagues. Countdown to the close starts now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown that are still streaming.
Whoever they are.
On YouTube. Do you look different on the YouTube screen than you do on the BTV screen?
That's a good question.
Yeah.
I don't know. Do I? I don't really look at myself.
No. Oh, stop. Stop.
We actually a little
you fooling.
Mike McKee's in here. John Tucker's in here. They're both just laughing at us.
I don't. I'm busy working all the time.
Well, I'm constantly looking.
She's full of jokes.
Do you Google yourself?
You know we don't. Yeah. One thing that you need to know about the radio studio, even though we have cameras, we don't actually have monitors, so we can't see what
it's
we
not
actually
until
look like.
You guys come up.
Interesting.
I'm also not shopping. That's what I tell my husband. Having said that,
that's a great segue.
Thank you. But your shoppers may be cooling down a little bit. We did see retail sales drop off a little bit, not as much as everybody expected, but we did see some big revisions upward in the previous months. But it does seem like we are seeing a little bit of slowing. A bunch of categories: furniture, car dealers, restaurants, and bars. That are down. Maybe Romaine's not going as much to bars lately.
Maybe.
Personal care and grocery, though, they're up. Anyway, so I don't know, but a little bit of a breather, maybe.
I never got bars.
Really?
What do you mean you don't get bars?
I don't know.
Well, you go in, you give the bartender money, and you get a drink. Yeah.
You get a drink.
You hang out with friends.
That's like a thing, right?
You know, I will say, even though we're continuing to see
drink alone at home in the dark.
some of this data that does show that, you know, if you're in sort of the soft landing camp, you're kind of adding to the pile of data that you have, in addition to, you know, yesterday's CPI numbers and then the jobs numbers that we've gotten over the past couple of weeks.
Yeah.
There are still those people like Jamie Dimon who say, you know, the market's overreacting and that inflation is stickier than it seems.
Okay, yeah. I mean, I don't know. I mean, I think the trend lines that we saw, quite frankly, at least out of the CPI report yesterday and PPI today, I mean, it shows a decent trend line here. And maybe it's not down fast enough as people want here, but I don't know. Like I said,
maybe that last mile is just going to be really tough.
Yeah, but go back and look at the miles that we've just covered here.
Yeah.
I will say on the other side of the conversation, you have Kathy Wood, who Romaine and I spoke to yesterday, saying that actually we're going to see deflation next year. We're going to see negative CPI next year. So between Jamie Dimon and Kathy Wood, who you got? Maybe don't
There's
answer
a debate for you, right?
Yeah.
There's a debate. That would be killer.
Yeah, I would pay money for that.
Me too.
Let's talk about space.
Which side are you taking?
Yeah, that's a good question.
Just viewing. Listening.
Viewing.
Yeah.
Let's talk about space. This actually, Romaine hand-selected this story, and Tim, I thought of you. It's really interesting. The Biden administration, it's going to ask lawmakers today to adopt a new framework for regulations governing private space flights. You know, we've talked about the billionaire space race. You think about Jeff Bezos' Blue Origin?
Yeah, that's
Origins.
Right. It's been a while. Richard Branson's Virgin Galactic, et cetera. You also have Elon Musk in the ring as well. Apparently, the Biden administration wants to put a few guardrails around that.
I think it makes sense. I mean, look, it's evolving. And one thing that I'll say, Katie, about those three billionaires who you mentioned, one of them has not gone up into space in his own vehicle, and that would be Elon Musk.
Oh.
So Bezos has gone up. Branson went up.
Yeah.
Musk still hasn't done it.
Oh, okay.
Congestion pricing is just around the corner.
He's too busy posting on X.
It's kind of interesting. I mean, listen,
Has he posted anything interesting lately?
We talk about satellites, right? And there's a lot of satellites up there, so maybe, you know, it has something to do with all that stuff.
I am curious, though, too. I mean, one of the reasons why I was interested in that story, too, is just really the idea of spinning off Starlink and whether that does sort of become, because everyone, I mean, when you talk about the next big thing that could come to public markets, I think everybody wants to get their hooks into SpaceX or some division of it.
But it's not like he's ever, you know, said he's going to do something before and then doesn't do it.
Yeah, he's got a way.
He's got, exactly. All right, anyway. All right, guys, that's a wrap. We're going to be back in less than an hour's time. We're going to count you down to the close, some earnings, too, after the close as well, Cisco among them. So join us on radio, TV, YouTube, and, of course, Bloomberg Originals. We'll see you at 4 p.m. Wall Street time.
Everything will always be all right when we go shopping. Well, you know that it's going to be all right when we go shopping.
All right, everybody, we want to stay with the shopping theme, if you will, and the retail sales theme. You know, more U.S. economic data. We said shoppers opening up their wallets a little bit less in October after quite a summer spending spree, and also as inflationary pressures are easing. So, I don't know, Tim, soft landing, anyone? maybe?
I mean, if you're in the camp that there's going to be a soft landing, you have plenty of things and plenty of data to point to over the last couple of weeks that certainly support your argument. Another inflation report this morning, too. Romaine mentioned this PPI, Producer Price Index, joined yesterday's surprisingly soft core CPI reading to signal that momentum for disinflation in the month picked up. Carol, the print will boost Fed officials' confidence that overall inflation is moving toward their 2% target.
Getting there. Still not there, though. Target and also TJ Maxx out with results, some mixed views in terms of how investors played it out. Let's get to it, and let's talk about the data as well as the earnings. Bloomberg News international economics and policy correspondent Michael McKee here in studio, along with Jen Bartashis. She's Bloomberg Intelligence senior retail staples and packaged food analyst. She's on Zoom from BI headquarters in Princeton, New Jersey. All right, Mike. So let's cut to the chase. We were saying before we talked with our TV colleagues, I was listening to you this morning. We're like, we wish we were talking to Mike first, just to kind of get your take on retail sales a little bit more.
Well, retail sales were reasonably good. There was a slowdown, but you have to remember when you look at these numbers that they are calculated in dollar terms, and the percentage changes in dollar terms. So as inflation goes down, the amount that is sold in dollar terms goes down.
So we pay less for stuff, right?
Right, which is why we constantly see a lot of variation in gasoline in this report, because gas prices go up and down, and so gas retail sales go up and down when you're talking about it in dollar terms. So inflation's come down a lot, and that has had an effect. We saw a very big September, surprising a lot of analysts, and that was revised higher. And because retail, they don't do a great job of accurately counting retail sales in the report. It takes a couple of months to get all the revisions in and get all the retailer reports in and do the math and that sort of thing. So the first report is generally off some, and so we saw this big revision to September, and we could see the same thing perhaps in October. But the key is that the revision of September was the end of the third quarter, so it sets us up at a higher level going into the fourth quarter, which is a good thing. And then the American people gave every impression that they're still willing to go out. Well, at least everybody except Carol is still willing to go out and go shop. And that was for her husband.
She's sticking to her story, okay?
It's her story. She's sticking to it. But if they're still willing to go out, then the question is, are they going to come out continually through November and a week from Friday, and then all through Christmas?
How much of the perceived softness that we got in the data today is about gasoline, though, Mike?
It wasn't as much about gasoline as we thought, actually. Gasoline sales were down 0.3, and overall retail gasoline prices were down 10%. And according to the PPI, gasoline prices in the month were down 15%. So you would think there would be a bigger impact than there was. Now, these are seasonally adjusted numbers, so that may have had something to do with a reason. The biggest changes were in autos, a little worse than anticipated because auto sales went down, and that's another hard one to translate because auto sales are unit sales and retail sales are in dollar terms, and they add in service and parts and stuff like that. Well, that was a little worse, but also strong were the internet retailers, and so you're still seeing people shopping. Maybe they were just too busy getting kids back to school, all that sort of stuff, and they stayed home.
Well, let's see what's on the mind of consumers, because we actually got two that are actually, brick and mortar, TJX and, of course, Target today. Jen Bartashis, you cover the retail space for us here, and these names. Talk to us a little bit about what we got from the companies.
Yeah, sure. Thanks so much. I'll start with Target, where I think everybody had sort of been waiting with bated breath for some positive news out of Target, and that's what they got today. And so as a result, you see the stock really just consistently up all day long. The idea behind that is you're seeing margin expansion, you're seeing inventory under control. These are all good signs as they head into the holiday season. Even though the top line is down and same-store sales were down, they weren't down as much as people feared they would be. So overall, it's a positive story coming out of them. And then with TJX, obviously There's been a lot of speculation about the flight to value, where consumers are looking for ways to stretch budgets or find things on, at a deal. And so that's what we're seeing play through with these retailers today.
Do you think that TJX, some analysts are saying that TJX it's down because of the conservative forecast that it gave for the holiday quarter. Do you think they're kind of on the lower end as well, Jen?
Yeah, I think they're a little bit on the lower end, and I do
like
agree
they're being
that
conservative.
Yeah, exactly. That they're being a little bit conservative. I think there's still some question as what's going on out in the market. And to kind of tail on to what you were talking about with retail sales, one of the things, if you think about an area that was a little weaker, like restaurants, you have to wonder whether consumers are pulling back in order to save up that money to be able to spend it for Black Friday and for Cyber Monday and to get a jump on their holiday spending. And so, I think that there are some indicators out there that we could have a pretty solid holiday season.